your children are turned into mindless vassals who now they look up to some twit instead of looking up to Thomas Jefferson or looking up to Nikola Tesla or looking up to Magellan. I mean, kids, Magellan's a lot cooler than Justin Bieber. He circumnavigated with one ship the entire planet. He was killed by wild natives before they got back to Portugal. And when they got back, there was only...
But why? $22 million in 3 fucking hours!
There is no nobility in poverty. I have been a rich man and I have been a poor man, and I choose rich every fucking time. The real question is this: was all this legal? Absolutely fucking not.
Neither go towards the feeding grounds at the edge of the ice, nor return to the colony. Shortly afterwards, we saw him heading straight towards the mountains, some 70 kilometers away. Dr. Ainley explained that even if he caught him and brought him back to the colony, he would immediately head right back for the mountains. But why?
What's your dream? To go away.
To go away. That's great.
Do you guys want to drink? I don't understand why everybody has to be so judgmental. I understand why mom's judgmental. I think it's because she cares, partially. I think it's also partially because everyone else is looking at her like, hey, Cody's just a bum. Cody's this, Cody's that, Cody's this. Cody's me, bro. Let me be me.
Oh shoot, I was muted. GM, what's up? What's up? Ladies and gentlemen, let me fix this real quick. There we go. Let's fix that layout. Let me go with this layout maybe. Or should I go with this one? Yeah, let's go with this one. All right, guys, what's going on? Welcome to another stream. Crypto Jones says never gets old. Yeah, the intro never gets old. Always hypes me up, man. Gets me in a good mood, ready to do these streams for you guys. So look, appreciate you guys joining us. It's gonna be a nice day today. We have Compute on. I don't know if you guys remember that project. That one was like popping off, went from like 500K to like 12 mil. One of our first bangers in the Discord as well. So we saw that. What else do we have today? We have Knock on today. So that's also like, private AI as well. So there's some interesting projects that we have on today. Can't wait to interview them. But man, oh man, Bitcoin sub 60K. I mean, look, guys, we've called this. We've been looking for this. We're prepared for this. We're not scared of it. We welcome this price action. We know we've talked about this for weeks and weeks and weeks, and you guys have seen this. You guys have seen this on my chart too many times, right? Too many times. So I'm still looking for like a deeper move sub 60K, deeper move here. But here we are. We're right where we need to be. And to be honest, I don't know about you guys, but on chain is actually holding up pretty well. On chain is actually holding up pretty well. As you can see on the right side of the screen there, sea of red, currently long XPL. We talked about that yesterday. We talked about that in the Discord. So yeah, long XPL right now. That's been playing out, looking and printing for me. But yeah, I mean, we are where we are, but not a bad place to be. To be honest, I wish we could just, go deeper into the sub 60K level, like maybe go, 55K, call it, maybe even 50K, who knows? But I kind of wish we would go just rip the Band-Aid off, right? But that's what markets do. They try to shake you off as much as they can. So here we are, sub 60K. So the question for the day, as you see in the stream title, Bitcoin below 60K, is it bottoming or breaking? And you guys know the answer to that. We're bottoming, right? We're not breaking. We are in the early stages, maybe even mid stages of this bottoming process. We've talked about quick dip to 45K. You think we're going to 45K? Oh my gosh. I don't know if we get that low. I mean, we'll see. I think we spend a lot of time here. Sub 60K. I think we go really deep into those levels. I mean, when you look at my 3-day chart, I'll pull that one up real quick. Yeah, I don't know. 45K is all the way down here. All right. So I'm going to just mark off 45K. Mark off 45K real quick. Let's see if we get there, man. Let's see if we get there. I'll put that as maybe like ultimate bottom. But Bitcoin will continue to do its thing. Let's see if we make it all the way to 45K. Pamadiji, GM, we should contact the BTC dev and ask him to do more marketing. Yo, can the dev do something? Literally. Who has the TG for the Bitcoin devs? Let's reach out to him. Let him know we got some advice for him. But yeah, that's where we are in markets right now. So we have about 10 minutes until our first interview. Dom is going to be joining us here in a little bit. But just some info on the macro side that I wanted to touch on before we get too deep into anything. On the macro side, this is kind of where I feel like we are. We Killer XBT, he basically calls it every time BTC trades sub 60K. That is our manipulation beneath the significant 60K swing low on the weekly and quarterly. Precisely the reason why the order book is stacked below us. So yeah, I think we're right here. We're in the early to mid stage of a bottoming process. I think the summer bottom thesis that we've talked about so many times on these streams earlier, over the last few months, I think that's what we're looking at. That's our summer low. I predict could see lower in October. So here's the thing about October, Crypto Jones, and I'm kind of questioning a little bit here, because a lot of people are looking for Q4 to be like this, Q4 to be this, this area where Bitcoin is going to bottom. We even see that the Whale Insider, this prominent Bitcoin miner, Jiang Zhuar, he predicts Bitcoin could bottom at 42 to 45K, right? So you have a lot of people expecting and calling for these much lower levels. And I just don't really know if we get them. This played out last cycle where, we're at 15K. People are calling for 12. They're calling for 10. Instead of just diving in and at least having some sort of exposure, a lot of people, they were busy kind of like trying to time the bottom. and I don't know. I see a lot of bottom signals everywhere. I mean, look at, I don't know if you guys remember this dude, Tech Dev. Tech Dev was around for quite a long time, pretty popular figure, overall in the crypto space, but like he was an ex Google, ex Meta. He calls himself Tech Lead. But his videos are very popular, as you can see, 1 million views on this one. But he's a YouTube crypto figurehead, and basically he said, "I sold all my Bitcoin. It's all over, and here's why." Right? And so, like, I know that prices could go lower, but at the end of the day, like, if everyone is expecting lower, if people are capitulating left and right, yesterday we talked about the guy who round tripped a ton and has now basically given up on crypto. And there's a lot of people out there with this kind of doomer mentality around the space. It just screams bottom signal to me. It screams bottom signal. And so it kind of lines up. I'm looking at the technical signals, the TA, and then I'm looking at the social signals as well. And there's a ton of traders that I respect that I try to bounce my my thesis off of. And so yeah, I don't know. I don't know if we see that those lower prices, but hey, let's see what's up. Let's wait and see. But that's the thesis so far. Sub 60K, we get a little bit of manipulation. Maybe we wick down to 50K. I can easily take 50K. I can easily take that. 45, pretty deep. Seems like a lot of people are looking for it. But regardless, wherever we go, a lot of people will be looking for lower. So what's the message? Bitcoin is in a process of bottoming. Now is the time to start to get exposure to some of these, start to get exposure to some good assets on chain. Start to get to exposure to whether it's neobanks, whether it's tech tokens on Pump Fund, like whatever it is. Like, this is the time to get exposure. Look for where you can position long term. I think Met, we talk about Met all the time on these streams. I think Met is one that I'm looking at for long-term exposure, as you can see, kind of breaking out here out of this. We talked about this a little bit the other day on stream, so you still see my squiggles there. But yeah, I mean, I think Met, I really like the how Met is looking. So that's one I'm gonna be focused on. You guys know, you probably see my tweets, like the Cludes, the Squires of the world. Those are deep tech tokens, and we'll talk about a few even today. So we'll talk about some of these tokens today. So we have our first interview coming up in about 5 minutes. Dom will be joining us shortly. So while we wait, you guys, you already know what we need to do. You already know what we need to do. It's been stream has been up for about 20 minutes. There's a little over 120 of us in here so far. You already know what we need to do. We're gonna go to MCG Live. Let's all do this. It's 120 of us in here right now. Let's go ahead and do get the housekeeping done. Let's go to MCG Live. You want to do two things. Go to @MCG. Make sure you're following the account. We really appreciate you guys. We've been growing. Oh my God, we're at 11.5K already. Dude, I just checked this morning. It's 11.4. Crazy growth happening here at MCG. We're doing like a couple hundred followers a day, something crazy like that. So make sure you're following the account. And then I want you to scroll down and I want you to look at this tweet here, Bitcoin below 60K. And I want you to do two things. I want you to hit like and RT. Let's just all do this right now, real quick. Let's just get this out the way. It's a stream within a stream. You guys see that? It's a stream within a stream. But let's get that housekeeping done. Make sure you're following the account. We appreciate you guys. We're here Monday through Friday, 12 p.m. Eastern time, breaking down the best and the latest happening on chain and in crypto. So now that we're done with that, now that we're done with the housekeeping, oh yeah, Crypto Jones, nice spot to go long on Met. Well-deserved growth. Hey, appreciate you. appreciate you. We've been getting a few messages lately, people reaching out to us, people in the Discord just like thanking us for stuff. Like, I got a message the other day of a longtime follower of mine, and he was saying that he's watched so many different crypto shows, crypto podcasts, and he really finds a ton of value in MCG, and he really appreciates what we're doing. So just massive validation. So we really appreciate you guys. Always appreciate your feedback. And honestly, appreciate you guys in Discord too. We just launched that like, a week or two ago, but I mean, you guys have been active. We've been chatting, getting to know each other on a more personal level, but also trading together and stuff. It's been really fun in there. So appreciate you guys. Appreciate you guys for being there. So we have 3 minutes till our first interview. The first interview that we'll have on today, as you can see here, is Compute AI, Zero. The ticker is Zero. So I figured we just kind of talk a little bit about Compute, just to kind of intro the stream, kind of intro the interview, get us warmed up. So we have this nice little write up. Basically, Compute AI is a decentralized GPU network that focuses on private censorship-resistant AI. Now, like I told you guys earlier, this went from like 500K to like 12 mil. This was one of the calls we had in the Discord. We were breaking it down, looking into the metrics. One of the things that we noticed was there was a ton of growth. And as you can see here, on the picture, you can see on the right here some of the highlights. There's some massive growth taking place. So I want to dig into Compute. I want to talk a little bit more about what further growth they've seen. We also saw that they even partnered with Squire. We were talking with Chris just yesterday on stream, and from his point of view, we talked about the good that will do for them, but would love to see kind of what good that will do for the Compute team as well. So we'll dig into that here in about 2 minutes. But we got our boy Dom up. Dom, the king, the legend, the one that's not as handsome as me, but handsome still. How are you, brother?
I appreciate the shout there on that. I'm doing good, man. Just got the haircut, so fix this lighting. All right, we're looking good, man. I'm excited for today. Dude, I know what Layden's building is super, super cool, so I'm excited to really break it to you guys and get the full scoop. This is a conversation today about potentially one-of-a-kind technology, something that's game-changing. And when I had it explained to me, it started to really click. So we'll see if he can explain it to you guys today, and it makes a lot of sense. But they are doing something completely new and innovative in the sense that they're I don't know, just doing something new. So it's super cool. We're excited to talk. Jill, how's your day been? Sorry, I'm a little late.
It's been good. It's been good, bro. It's been a busy morning for me as well. But honestly, excited, bro. By the way, chat, I don't know if you guys feel the same way, but I love the way Dom intros projects, bro. Like the way he tees these projects up is just, it just gets me hyped for the interview. Like, yesterday, the last interview of the day yesterday, you were teeing it up and he was just in the background cheesing. Yeah, Riverboat founder was just cheesing back there, bro. So I love the way you tee up projects, dude.
Flattery, dude. It's the best way to get them comfortable. Speaking of teeing up a project, I think it's time. We got Layton in the waiting room. We're going to bring him up again. Like I said, this is technology that's completely new and unique. Uncensored, private, decentralized AI inference is something we've seen before, but they're able to do it in a new and unique way with their pooling system and their sharding system. Again, it kind of sounds tricky when you listen to it from the start, but when Layden really breaks it down for you, it starts to really make sense. And the mechanisms behind it allows for some really unique use cases. So he's going to come up here and talk about it. The question today is, if we have new primitive technology on our hands, and if this is something that's going to change how we see decentralized inference as we know it. Of course, again, the conversation we continue to have on the show is that inference is the new oil, and it's heavily subsidized by VCs. The cost is going up rapidly. It's hard to get a fixed cost on this stuff. And so when people can find a discount or a decentralized network, it seems like this is kind of the direction we're headed in. With that being said, I think we got to bring up the man to talk about himself. Ladies and gentlemen, give a warm welcome to Mr. Layden. Layden, thanks for joining us today.
Hey guys, what's up? Thanks for having me.
Dude, we're excited, man. I got to talk with you the other day very briefly, just trying to understand the technology before, really getting you on. And once it clicked in my mind, it really made sense. It's actually not that complicated the way you broke it down. And so I'm excited for you to get on here and break it down to everybody. As we do, we always start with just founder and background so we can get to know you a bit more. But can you do us a favor of telling us a bit about yourself?
Yeah, so I'm Leighton. I'm the dev of Compute. I'm 21 years old and I study electrical engineering in university. I started Compute back in January when I was wondering why I couldn't use my $200 cloud subscription because their data centers were like down hours on end each day. So I started looking into ways how I can build something that provides people with AI that's private and censored and decentralized, and also utilizing the millions of idle GPUs all over the world and giving people money for them.
Nice. I love it. How does your background tie into what you're building today, or does it have any tie in? Just kind of curious how, you're a young man. How do you get into something like this?
Yeah, so I've always been interested in AI. I started using it in 2023 with OpenAI when it was just a playground still, not the ChatGPT. So yeah, but I think for the sharded inference, for example, I'll talk more about it later, but like the start for that was my machine learning class I had last semester, and it gave me some insights on how to start the sharded inference, but I'll talk about that later when we come up.
Great. Well, I mean, that's kind of like a perfect transition into, I guess, what is the product you're building here? Now we understand a bit on your background, and you got interested through this class you took. What's this product you're building, and what's kind of the problem and solution you're maybe solving for?
And if I can jump in real quick here, Leighton, as well, talk about the personal problem that you had. I mean, from what I understand, this comes from a gap that you saw personally while you were while you were building and using this product. So talk about that as well.
Yeah, I was using AI daily, and I had like the $200 Claude Max subscription. But I remember they were like each day they would go down hours on end, and I was wondering there must be millions of people right now who cannot work on their project again. And I also started thinking about what does Claude know, Anthropic know about like all my private stuff about my project, and I thought it would be just nice to try and build something good for decentralized AI. And I also remember I have my 4090 in my PC, and I tried local AI, but I saw it's possible, but there are also millions of other GPUs all over the world that are not like providing, and I wanted to like puzzle the pieces together, and that's why I created Compute.
So maybe we touch on this a little bit because, you were like, decentralized compute's important. This privacy, these uncensored models, like they are important. People are probably going to want private compute. And then you look over and you're like, okay, well, I have this idle GPU. And now something clicks in your mind. Okay, maybe I can, share my idle GPU. It could contribute to a pool. And now it's actually able to generate revenue. Now, this isn't a new thought. There are a lot of people doing this. You take it a step further and actually make the sharding. I guess the sharding is kind of your specialty here. And that's what changes this and makes this really unique. Could you maybe get into, I guess, what sets you apart?
Yeah, so I built a full network without sharding. And at the end of the day, there was a lot of supply. Like a lot of people wanted to give their GPU out, but they're all consumer GPUs. The problem was they couldn't really run any model that there was demand for. People don't really want to pay for a model that's only able to run on a consumer GPU. So that's what actually sets the link to my class, machine learning class. I saw that a token has to go through each layer of a model, but those layers don't necessarily have to be on the same device. They can be split across devices. So that's when I started, okay, why not get a bigger model and split the layers onto different devices, like different consumer GPUs. And that way we can have a big model, but still run by compute that we own.
So I guess what was the problem before this? So we can really get a better grasp and understanding on the market. Before you guys kind of introduced this new primitive, what did it look like before? How did this function?
So before you only had models that were only able to run on small consumer GPUs. So the quality of the model wasn't really that good. And that's why there wasn't really any demand for decentralized AI, since just paying $10 a month for a subscription that gives you an excellent model, a frontier model, outperforms like paying for a model that you can run on your own GPU. The downside is, of course, you don't own it, but like the price outweighs it and the performance outweighs it. So that's why I started looking into sharded inference. But there are, of course, a lot of problems with sharded inference, like the latencies between the devices. And that's what we're trying to solve right now with especially speculative decoding.
So can you talk to me a bit more about sharding then, so we really understand that? I think what really sets your product apart, and when it started clicking in my mind, was you told me how the traditional model works and then how you guys step in and make it faster and, you know, bring
Yes.
down that latency. So could you maybe start us there at the top? What does a traditional model look like and where do you guys change that?
So a normal model just takes a token and runs it through all its layers. It's deep; those are deep neural networks, and the token goes through each layer. The thing is, with sharded inference, it's possible, like you just put the layers on different devices, and the token goes to each layer on each device, and then across devices to the next layers. The problem is, it's only one token at a time, and the latencies between all of the devices takes a lot of time and gets like the token per second down. So what was like the major breakthrough that could make sharded inference usable was speculative decoding. If you want, I can give like a simple analogy on that to understand like how it solves the problem of only one token going through the swarm at one time. Do you want me to do it?
Please, yes.
Okay, so I've actually thought about this a lot because it's really not that simple to explain something that difficult. But let's say it's like at the end of the day, you just have to get a model with like different workers answering a prompt. The problem right now with the swarm, without speculative decoding, with normal decoding, is it's only one token at a time going through each worker of the swarm. And let's say this is a pizza. So like the answer of your prompt is making a pizza, and each worker is a pizza worker. With normal decoding, what happens is the layers are split between pizza workers, and you have to basically solve a pizza of 8 pieces. So what happens is you make it piece by piece, and each worker does like one of the ingredients. You have the dough, you have the tomato paste, you have the cheese, and you have the pepperoni, for example. So what happens is the first worker in the swarm, in the chain, does the dough, then it goes to the next worker, it makes the tomato paste, goes to the next, makes the cheese, then the pepperoni, and then it's finished and it goes back to the user or the oven. With speculative decoding, is you add a smaller worker, a draft worker, at the front of the chain. What it does is it guesses slices like in a batch, like 3 or 5 at a time. So what then happens is when the user asks a question, instead of doing one token at a time, there's a smaller draft model or a smaller draft worker doing 3 tokens at a time or 3 slices at a time, and it makes the slices fully with all the ingredients on it. And instead of the separate pizza workers doing the ingredients themselves, they just verify the ingredients. So what happens is you have like 3 slices at a time from the draft worker going through the chain. The first worker checks, okay, all the 3 pieces have the same correct dough. Then it verifies, okay, the 3 tokens or the 3 slices are correct. It goes to the next worker. Then the next worker checks, okay, do they all have tomato paste on it? And it could be that like one token was faulty because of the draft model guessing them, or like one slice had the wrong sauce, for example, barbecue sauce instead of tomato sauce. So then it will say, okay, that token is incorrect, or that slice is incorrect, but the other 2 are correct. And then it goes through the full chain. And at the end, you have basically a batch of multiple tokens being verified as a correct answer, while only going once through the chain. So we have the same latency, but multiple tokens. And that's how you basically cover the latency and how you mitigate them.
So how I'm understanding this is, you know, it's almost like there's an assembly line. It has 8 different steps to go through to get to its finished product. Instead of that, which is the traditional model, what's happening now is the first person in the line is getting the entire thing done. And now the remaining 7 people are actually only there to verify that first person did things right. And of course, how I understand it is AI models are predictive by nature. And so what happens is the first guy predicts that he gets everything right in the line. He sends it through, and then everyone verifies that this is right. And if they all give the green check mark that it's right, it goes through as an accurate result. Am I understanding that generally correctly? And then, of course, that saves a lot of time rather than each person doing one individual task. It's predict what everyone else is going to do, send it through the assembly line. They all say it's good, 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 and it goes through rather than I work on this, he works on this, he works on this, and it's 8 different iterations.
Yes, so it's basically the same amount of latency because you only have like 1 hop extra because of the extra draft worker. But you have like the same amount of latency, but you have like multiple token throughput at that one time. Of course, there are like some tokens are wrong in the batch because the draft model that guesses is a smaller model that doesn't fit on the entire GPU. That's like the entire problem that we're solving. So it guesses a few tokens of the batch normally wrong, but it's still way more than one token at a time.
Got it. And is there anyone doing this right now? Or are you guys kind of the first people to discover this? Curious.
No, there were a lot of people trying to do this experimenting, but they all stay like on the experimenting and prototype phase. And what I'm trying to do is cross that border of prototype and experiment and to actually integrate it into the compute network that we already have right now and actually see it work on world scale, basically.
Can you talk to me a bit more about that compute network? So what does this look like in practice? Okay, we have this, this new system that solves for sharding, and it basically removes the latency issue, which is what was holding the big drawback of these decentralized protocols. What does the network look like now that that blocker is kind of out of the way and solved for?
So currently it hasn't been integrated in the network yet because I still have to do like a lot of work on the protocol itself. But once it's integrated, people could permissionlessly join the network, leave the network, and that's basically my end goal. They can join the network, leave the network, just basically do every model they want. And at the end of the day, it's a network of compute. So you could also do AI training on it. You could also do just learning inference training on it. That's what my end goal basically. But we're still far away from that because there's still a lot of stuff to do, and I'm only alone also. So that's why I'm trying to build open source to have people put up PRs on the GitHub and do each, so multiple people have like their input and.
Got you. Yeah, Drosky wants to ask a question here, and yeah, Drosky, we do questions. It's just got to work into the flow here. He's got a really long one, so I'm gonna try to read this out to you. He said, if inference is running on idle consumer GPUs across WAN, is the model actually shared across multiple remote GPUs per request, or is each request routed to one available GPU node? If it is shared, how are you keeping KV cache locality and avoiding WAN RTT, denominating decode latency? Can you share a per token trace with node regions RTT, verifier data, drafter timings, accepted speculative tokens, P50, P95, time between tokens, GB? Okay, he's using a bunch of buzzwords. Again, this is like, we're trying to keep this show as simple as possible, so this definitely goes over the head of like myself and a lot of people. I'm not sure if you understand that question, but I have like no clue what he's asking.
There's a lot of that question that's still yet to be solved. For now, I'm trying to focus on the usability of it because I don't really want to solve like trustless verification and stuff without showing that it actually works at usable speed. So my main goal right now is speed. And one of the questions was also KV cache. And that was actually a problem I encountered because the higher the context goes, the larger your KV cache grows. That's basically the part that keeps the context. So what I had to do to solve that is like up the headroom. I'm going to use words. I don't know if you're going to understand, but it's basically to address the answer of Drosky. It's basically I had to have more headroom in the VRAM for the KV cache. So I had to either add more nodes, but this would add more latency. But right now you can go to the GitHub. It's fixed. I think I have like on GPT OSS 120 billion, I hit like 26 tokens per second at 100K context. It was copy retrieval though. It wasn't really prose. So yeah.
Got you. If we could kind of wrap this up, because it is a bit of a complicated conversation. If we could kind of wrap this up with a one-liner on, what I think we're used to traditionally and what you guys solve for to kind of close the loop for everybody. Could you kind of hit us with that right now?
I'm not sure if I entirely understand the question.
Like a one-line summary of what you guys do.
Okay, so we are trying to provide people with AI that we own, basically AI that's private and censored and decentralized, while also enabling people to make money with their idle compute.
Got you. Talk us through the total addressable market here. Obviously, this inference market is growing tremendously fast, and a lot of people have resorted to using OpenRouter and like going down this cheap inference route. Could you talk me through a little bit on just the market you guys are working in here and how big this could get, so we can really understand?
Well, I suppose everyone really wants AI that's private. We've seen a lot of regular people, retail people revolting against the data centers and like the big entities. You also have enterprises who want their workflows to be private and not controlled by Anthropic, for example, and all their data leaked. So I think there's a lot of opportunity in the enterprises, like offering contracts, let them use the network for whatever they want. So yeah, there's basically a lot of people who care about their data, and I think we'll see the same amount of revolution that we had with like Facebook and Instagram back in the day about how they collect our data, and that in the same way we'll have a revolution right now about AI companies, how they use our data.
Got you. And what's a strategy to corner some of this market? Obviously, like it is a big market, and I think you're right. People generally are going to want to have private data. It's important. There is going to be a revolution at some point. I think when people realize just how much data is being collected and what this means and how much is being sold for. What's your go-to-market strategy here? How do you successfully corner this market? Because like in theory, yeah, it's a huge market, but we need to, take a meaningful chunk. What's the plan to do so?
So for now, I've done a lot of partnerships. Recently, I did PodSquire, use Pod.ai, and basically users can use Pod to tap into the network. It's also a two-way partnership because people who stake 0 get free daily inference. I'll sure we'll talk about that later, but they get free inference and they can sell their inference on use Pod to people who want to buy it from that market.
Nice.
Oh, interesting.
Yeah.
Shall you jump in?
Yeah, I had a quick question for you. So you mentioned before that there are other people building in this sector, and they're in prototype phase. They're staying there, and you're trying to make something that people can actually use. What makes them stay in prototype phase, and what makes you want to kind of go beyond that?
Well, I think when you work on something solo, there's not really an overhead above you saying you have to do that, you have to do that, and you're more free to do what you want. So it's maybe a bit unorthodox, but my way of building is just basically putting it out there and see the reaction of the people, and like reacting to that, like doing fixes, doing like changing stuff. So basically that, and like right now. It's still a prototype. The sharded inference is still a prototype, but like the actual product of the compute network, and that's like one model running one GPU running one single model is already live, and you can just go to compute.ai, ask a question, and it will answer just privately and censored, and it's running on somebody else's GPU.
Got it.
Can you talk me through the customer on this too? I mean, we always talk about the customer prototype and who the target audience is, and it ties nicely with your go-to-market strategy here. But talk me through, who is the customer and how do you facilitate? Because it's a two-sided equation, right? You have to have the supply side. You have to make sure you have the inference for people to use, and you have to have the demand side, people that actually want to use it. So when you look at your customer and you look at this pool that you're operating in, who is the prototype of the customer that's going to come and use your inference, and how do you get enough supply and demand on both sides?
Yeah, so for now we have a lot of supply but not a lot of demand. So when I look at, I don't really have that much data on my customers because first of all we're private, so we don't collect any data on our customers. So it's really hard to say who are our customers. But when I look at like public feedback on socials, it's most often people who care about AI deeply, who are themselves using local AI and want to check out this new technology, or it's people who like the incentive part of it. But that's not really my main target customer. So yeah.
Who would be your main target customer?
People who care about like their data, who care about private AI and AI that doesn't like give biased answers back to them.
Yeah, and a conversation we keep having is at some point in time, and I'm not sure if it's happened yet, but these enterprises are going to need to switch to a private model because they just can't use these frontier models because the data is going, they don't want their data going to OpenAI or Anthropic. And so they know this is a big issue. So right now they have custom data centers being built. They have people coming in and setting all this stuff up for them. What it seems like in the future, we're heading in this direction where enterprises are just going to use a decentralized, uncensored model that is privacy preserving. Is that something you see happening, and is part of your strategy going to be targeting these enterprise clients?
Yes, definitely, because in a way, I think the supply of this network could be unlimited. There are millions of GPUs all over the world, which would also make it very cheap once every GPU all over the world like connects to it. So I think I could offer, if you can offer enterprises a cheap deal that's private and that's uncensored, I think they would like 100% of the time take that deal.
My biggest gap is, okay, so many people have computers. There's all these GPUs that are just sitting idle. Like, this is the crux of the question. How do we get people from right now who aren't, you know, selling their spare compute to, hey, I got this thing sitting around, I can make a couple extra bucks. Why not do it? Like, when and how do we take that leap from people just having this idle compute to actually joining a network and selling the idle compute that they have?
Yeah, I think this happens really fast. There's a little bit of a snowball effect on the social aspect because, for example, Jake from CoinFund recently posted a tweet just saying, "Oh, I connected my GPU to the Compute AI network, and I'm earning money on idle compute." And there were like a lot of people asking, "How do I do that? How do I make money with my GPU?" I think there are a lot of people who want to try that, and they instantly go to Compute.ai. And I try to make it as seamless as possible. There's two types of worker. You have a worker where you have to type in your with CLI, but you also have a worker that works in the browser itself. So you just have to do one click in the browser, and the GPU runs through the browser with no setup or anything.
Got you. I'm looking at the site here.
Yes.
I want to talk about Traction a bit. How's Traction been? When did you guys launch this? When did this go live? And how's Traction and growth been since doing so?
So we've been live for about 20 days. And at first it was a bit slow. I think we had only at the start you only had 10 people providing compute, which was 2 of them were me. So I think right now we are at 80 workers online. And I think 2 days ago we had 100 and a bit. So yeah, it's it's multiplied by 10, and I think there's a lot of people wanting to try this out.
Yeah, this is really interesting. Do you know, and again, you're private, but are a lot of these coming from surplus? This is a typical conversation we have. You know, people love the Venice model, VVV, and of course, staking Venice gives you Diem inference, right? Daily inference of Diem. And we've seen a lot of these people go to platforms like Surplus, Squire, maybe your platform, to actually sell some of this, spare daily compute that they're not going to use. Do you know if that's part of the cohort of people that are using your platform?
Well, I've only done the partnership with UsePod yesterday. So, and there's also no really any way to check if the inference is being sold. I mean, maybe on the UsePod side, but on my side, I don't really collect that data. So also all the data you see here are just the numbers. It's not from profiles specific. So it's really hard. That's maybe an issue that other companies don't have. They can do data analysis per customer, but my data is just numbers without any profiles attached to them.
Okay, maybe talk to me then what this UsePod, this partnership does for you. You obviously made that connection to Chris, good friends with Chris on the show. I think we had him on yesterday or the day before. I can't remember exactly.
Yep, yesterday.
But was it yesterday? Dude, time flies. But he's great guy, great entrepreneur, and we love what they're doing over there. What does this partnership with UsePod unlock?
Well, at first, I hope a lot of supply. No, a lot of demand. A lot of demand, because that's basically my main goal right now, is to get a lot more of demand. That's also why I'm building the sharded inference, because if we can offer bigger models, more people would pay for it. And also a way for people to stake more, because if they can sell the daily inferences from their stakes, they are more likely to stake, because we are actually right now at an all-time high of 0 staked, with 49,390,000 0 staked. So that's nice to have. That's an all-time high.
Okay, well, let's talk about that then. People are staking 0. You mentioned staking 0 gets you daily inference, which of course you have this partnership with UsePod. You can go and sell it on there if you don't want to use it. Walk me through some of the tokenomics and why you need a token for this network to run, and where it ties into the whole thing.
Yeah, so staking is basically a network effect token. 0 is a network effect token, and it basically gives users and workers, on both sides, a way to accrual value from the network. So We've done 15,000 on buyback and burns, and we've also given $15,000 to paid out to stakers. And so yeah, it's basically a way for people to see economic growth when the network grows.
So tell me how this works. I stake my Zero token.
Yes.
In exchange for doing so, how am I getting paid out? What do I get? What are the benefits of this?
Okay, so the benefits, first of all, you get the daily inference allowance. Basically, you get free daily credits to use on the network. You also, if you're a worker, you get a higher revenue share. Instead of 70%, you get 80% of the total job cost. And you also, basically, by staking Zero, you own Zero, and the token also gets buyback and burned.
Out of these workers, how many of them, on average, do you think are staking to get that extra 10% bump in revenues?
If I have to guess, I think it's about, right now we have 80, maybe 15. It's really hard to tell because I don't collect that data because it's like the privacy part of it. So yeah.
Got you. Okay, so this is a network effect token. You can stake it to get free inference. Tell me how that works. Where does this inference come from? People can go and sell it on UsePod. Just walk me through how that whole situation works.
So there's a daily pool of credits being handed out to stakers. That's split weighted by how many Zero you have staked, and the cost of this pool basically gets cut from the treasury, and the treasury gets value from the token fees and from the share of each job. Like you have, I think, with workers who don't stake, they get 70-30 split. So 70% goes to them, 30% to the treasury. Workers who stake get 80% and 20% to the treasury. So that daily inference credits pool basically gets taken from that 20 or 30% that goes into the treasury.
Okay, and then with that treasury, of course, like you said, 30% to non-stakers that are working on this protocol, 20% keeps for people that are, or 20% for the stakers. Sorry, I kind of butchered that a little bit. But what happens with that treasury? Obviously, you have to make a living here. You're running a business here. I don't think this is a nonprofit. How much of that do you keep? What happens with that treasury? Is it going towards future development? Maybe just walk me through what that looks like.
So I've recently done a tweet about my Vast.ai receipt. It's a Vast I use to run GPUs all over the world to do testing on the sharding inference engine. And it costs a lot. I think it costs about $200 a day minimum. Wow. For just testing and renting out GPUs. So a lot of the money goes to that. And yeah, also goes back because I want to make the usage of compute.ai as seamless as possible. So if you go to the main website, there's like this box saying like, talk about anything you want. And the thing is, that's add-on usage. That's usage for people that don't have an account, that don't pay for it. So that also goes from the treasury. So I think once you sign up, you have like 5 free prompts that also comes from the treasury. I just wanted to make it as seamless as possible for people to use this.
So I guess the question is, I guess there's a question around burn rate. What's the health of the treasury? Like, I mean, has the token fees, like, or have you guys seen like a lot of growth in the treasury from the token fees? I mean, what's the health of the treasury looking like, if that's something that you want to talk about?
The health of the treasury is excellent because we Zero went to like 12 million, which generated a lot of fees. So right now we're in a surplus, a massive surplus in the treasury.
Wow, nice. And have you been approached by anyone like I mean, as much as you can talk about, and know some of these things you want to keep close to the vest, but I mean, have you seen any interest, like from, whether it be VCs, private investors, or anyone just looking to help you build?
Yeah, when we went to 12 million, my inbox was like spammed a lot, and it was hard to like filter through like the quality DMs and comments. But I've had a lot of interest from VCs, especially because they like to invest in new technology. And I've had many like calls with them, and also a lot of just regular AI people, like AI people that are big on Twitter, and they show interest, and then they ask me like, how are you doing this? And then I show them the GitHub, etc. And yeah, many interesting talks. I don't think I can share anything further, but I've been in a lot of talks with VCs and AI people.
Are you seeking future funding on this, or are you looking to continue to do this bootstrapped?
I mean, I would like to do this bootstrapped because it gives me full freedom on everything. But I think if the opportunity shows and I feel okay with it, I think it's the right choice, I would probably go with a VC.
I want to also talk about useful proof of work. We have Knock coming on after this. We've seen Pearl get really popular. And these are platforms basically that, AI is doing these math equations, and to solve for the AI and compute and inference and whatever the AI is solving for, it can also secure a blockchain. And so you're using compute already for your AI, but you can also be using it for blockchain in tandem and be earning money as someone securing a network. Have you been thinking about a useful proof of work? I mean, with everyone coming through your platform already using this inference, could they also be earning, a network token, a useful proof of work network token?
Yeah, people ask me and tell me like, why, if you're making such a sharded inference network, why don't you like make your own layer 1 blockchain? And my response to that is, well, basically, first I want to like build it out, see if it actually works, and try to like make a functional product, and then I'll start thinking about migrating to a layer 1. But I think it's good to like have a thought about that, but it's still like for way in the future. But I have seen the useful proof of work. I've been in DMs with Alan from Quai Network, and I think what they are trying to do is something really good, because why waste all that like GPU power on just solving SHA-256 when you can run inference on it? So.
Got you. Maybe I guess the next follow-up question on this is, why do you need the blockchain? Like, why does this have to happen? You guys choose Solana. You're doing this all on Solana, which is fast and cheap, and we understand that. But does something like this fundamentally need the blockchain to even work?
No, the network is apart from the blockchain. A blockchain is just nice to have a very integrated token to it, because then like the network and the token works in synergy, and it's basically almost one. But now the token is on Solana, the network is separate, it's not on the blockchain for compute.
So you have this network that enables new possibilities via, your sharding mechanism that removes some of the latency barrier that, was once a pretty big issue. What kind of comes next? I mean, if you had to walk me through your roadmap and some of your thinking here, you've got really great bootstrap distribution, right? You launched this, people loved it. They're like, wow, this is a new useful primitive. We love the spin that you're putting on this. We see how big the inference marketplace is. We see how important private decentralized compute is. What kind of comes next for you? You're having these conversations with VCs. You have this distribution. Like, what are your next steps?
So my next steps is just finishing the sharding engine and integrate it into the compute network, and basically become the first sharded inference network on Solana.
Got you. Is someone able to copy this? Like, if people see your success, and I mean, obviously, I'm sure they have, like you said, you've been flooded, could they just come across and try to replicate it?
Yes, they can, because everything is open source, and that's also a way for me to prove that the things I'm posting is like not bullshit. So there are people who have already like copied, and I see them launching coins. But in my opinion, if you launch coins and try to like extract value from just copying something, I think that's basically, I mean, people already see like, okay, yeah, that's not going to work.
Interesting. Yeah, I guess I continue to think on this, like, how do we grow this from where we are today, where we have people proven out, like you have early stage of product market fit. How do we go from early stage of product market fit to the dominant inference platform that everyone is, renting their spare and idle GPU compute to?
I think it's just making compute so good enough that it's like basically impossible to ignore. That's like also one of the promises I've made. I recently, not recently, but like a few weeks ago, I put out a tweet saying one of my stating 3 promises, and one of those promises were I'm going to make compute so good that it's basically impossible to ignore. And that's like basically how I'm going to do it, trying to do it.
Interesting.
So,
go ahead, Jill.
If you're, finish your question. I think mine will take us in a different direction. So go ahead.
No, that's fine. I was just saying this is fascinating. I think I'm generally kind of good on questions, so I'll let you take it. I was just going to say it's been a fascinating conversation.
Yeah, it definitely has. And we appreciate you, Leighton, for joining us today. It's really just interesting trying to break all this stuff down. I mean, were you in crypto before this? I don't think we got that side of your background when you first joined the stream.
Yeah, I started. Actually, I think my first interaction with crypto was in 2016 with like the first like Coinbase wallet stuff. But of course, I was like, I think I was like 13, maybe it. Yeah. So I couldn't really invest. I knew people who wanted to invest, like my uncle, but they didn't do it. So he's still like regretting it till this day. But then I started passively investing in like 2021 with like $20 a week, like it was my weekly allowance or something from my parents. And then back in 2024, I started with Solana, and from then it just basically grew. And then because I also had interest in AI, and since then I've just been building, trading on Solana on all the chains.
Why Solana specifically? Any particular reason that you chose Solana over, some other chain?
I think it's where I made the most amount of money, and it's where I'm home to. So that's why.
Solana's home. I love that. Just generally asking you about your founder's experience. I mean, I'm assuming this is your first time, being a founder of a product. What was the benefits of launching a token? I know that of course it's connected to the network. It'll grow alongside it. But did you see like any drawbacks of launching a token or any benefits? What was your experience like?
So the reason I launched a token is because I'm solo dev. I don't really have that much connection, and I know launching a token gives you a very big initial exposure, and that's basically what happened. And it gave me that. So now it gives me a fair shot of trying to build something out. Of course, there are many drawbacks, people calling you a scammer and just flooding your DMs and basically trying everything to get your morale down and trying to get your token down. And for those people, I just want to say, like, I'm only just trying to do something good for decentralized AI. And I think a lot of people forget that. And I'm also building an open source. So if you have any doubts of what I say, just go check the GitHubs, go look at the GitHub, go look at the code, try it out yourself and verify yourself. And only then you can DM me, ask me any questions. And of course, I'll make mistakes, but I'll always try my best.
Awesome. Yeah. I mean, building in public always comes with its, pros and cons. But always like hearing from the founder side what your experience was like. I mean, if it wasn't for the kind of distribution that a token gives you, would you been able to build something like this, outside of just the opportunity that crypto provides?
Yes, I think I would be able to build it, but I don't think it would have catched on, or I would have had the motivation to continue, because it's really hard to build something. I've tried it before, and it's really hard to build something with no interest in it, and with no feedback on it, especially because you are solo.
Got you. Wow. Go ahead, Dom.
I just want to kind of close this off with the question on, how you get this demand side. You said supply is not an issue. And I think this is the common thing that I've talked to with the Surplus team, with the UsePod team, with anyone doing this decentralized inference stuff. It seems demand is kind of the hardest part here. How do you go and get these users to buy this inference and buy this stuff? Because supply seems to be fine. It's the demand side that may be a little more difficult.
So it really starts with, like, very simply put, just have something to offer that they want to buy. And right now, with without the sharded inference, you only have these models capable of running on the consumer GPUs, and people simply don't want to buy that, don't want to pay for that. So it really comes down, for me, is just to develop this sharding inference engine and build it out and add it to the network, and then offer models that people want to pay for. And hopefully from that, it will automatically follow into people buying it and paying for it.
One last question, just I think to really solidify how the system actually works. You mentioned latency being the biggest issue, and that's why your sharding technology is so unique. What does that look like practically, right? If I go on any of these inference providers and I choose a specific model and I type any question, it takes some time, whatever, and then it spits out my answer. Could you tell me, I guess, practically as a user, what that looks like the old way versus what that looks like with your sharding technology and what compute fixes?
So in essence, the sharding technology doesn't really bring faster speeds compared to older types. Like if you go right now, it doesn't really give faster speeds, but it solves the problem of being able to run bigger models on smaller GPUs. So the problem was you cannot run a big model, bigger quality model on a small GPU. So split it across a few smaller GPUs.
Got you. And okay, so that's what we're looking for is people want these high quality, big models. And typically the decentralized inference providers can only give you either the old models or some of the smaller models. And it's like, no, we need to get these enterprises,
Yes.
the big models that everybody really wants, because that's where the demand is. And to do that, we need to introduce the sharding technology that splits it across different GPUs.
Exactly.
Okay, that's what hit it home, and I think that's the big thing that people are missing. You can have all these inference providers, all these marketplaces, but if they're not providing the models that people want, no one's going to use them. And ultimately, it wasn't possible until recently and now with what you're doing at Compute and with the Zero token that people can actually get these big models. And what's happening is they're split up across multiple GPUs to create it in a decentralized manner.
Yep, exactly.
Okay, very cool. I think it makes a lot of sense. Well, we appreciate you. This is a big vision. If it's achieved and you guys can knock it out of the park, I think you have a big market in front of you. We're going to keep eyes. I think if people want to watch this and understand if it's going well and being successful, what's the best metrics they can look at? Is it just going to be contributors to the network? Is it going to be workers? What should people be paying attention to?
Especially for the sharded inference, is they should go onto GitHub and look at the recent commits. That's basically the latest update you can get of what I'm building. And for people who are not that tech savvy, cannot look at code, just put get GitHub in any AI you use daily or any agent you have and ask it just the questions you have, and it should like answer without any bias.
All right, very cool, Leighton.
Awesome.
We appreciate you.
Thank you for the time.
Yeah,
Thanks,
we'll be
Leighton.
talking soon. When some of these workers start scaling up and the numbers start looking great, let's get you back on. We'll talk about updates and how things have progressed.
Yeah, see you then.
All right, see you, brother.
All right, Leighton.
Cool.
Takeaways, Dom?
Yeah, takeaways. And at the very end, I think is when it really sunk in why this was important, because for the big conversation, it's not, okay, this is just another inference marketplace. And I think that's what a lot of people are looking at. Okay, this is just another inference marketplace. Yes, it's important, but you got a lot of competition. I think finally at the end, when it really started clicking was, okay, yes, this is an inference marketplace, but the issue with inference marketplaces is the fact that they can't provide the models that people really want, the frontier models. Now, what's actually happened is through this new sharding technology, what you can do is provide these frontier models, the models that everyone wants to use, for much cheaper. And what's actually happening is it's taking, 4, 5, 6, 7, 8, whatever it is, GPUs, and splitting it up between all of them to provide that model. This wasn't possible before. That's, I think, the big crux. Once people understand that, it starts to make a lot of sense. So my takeaways are, doing something cool and unique. It's gotten picked up by a lot of really interesting people. Of course, I just brought up pictures of some of the people that were looking into this and I think really interested. We saw Sammy, of course, talked about it. Look, the right people have eyes on this. And, for me, that's, I think, pretty validating. So, yeah, cool conversation.
Yeah, very, very cool. They haven't gone through an ace round or anything, right? Like,
no, they haven't. And you know what? I should have asked about that.
I literally just thought about it. I mean, he mentioned that, VCs and some big folks are reaching out to him. So would be interesting to see like what direction that side of things, take or going. Because this is pretty massive. Like it's starting to kind of click for me at the end. It started to kind of click for me as you were putting it together at the end there. As far as what they're building exactly.
Yeah, it started to click for a few people. So yeah, nonetheless, it's interesting. We'll see how it goes. I did just see Kled put out a update in real time and it spiked the chart. Do we want to cover that?
Yeah, I saw Kled was pumping a little bit. Got some base news out as well. We do have Logan in the
waiting room. Okay,
in the waiting room. He just joined up. So we can maybe cover that real quick and then we can pull him up.
Well, let's, it looks like it's a bit longer of a post. Let's hold off till after. We'll definitely jump into it because this is spiking the chart. There seems to be some interest. So no, we'll jump into Knock. And of course, this is something we talked about actually briefly with Leighton from Zero, from Compute. And it's this useful proof of work. And I think what people are starting to discover is, with all these AI models, with these data centers that are getting built out, there is a way to actually put these to work in tandem with the work they're doing for AI and inference. And so I think this is a really interesting conversation. I wasn't super familiar of useful proof of work for a while until I really, I guess, dug into Nock, dug into Pearl, dug into some of the other ones, and it really started clicking. Okay, it's almost like a no-brainer not to secure a network, because we're already solving for these problems, doing these mathematical equations. And again, it's kind of a difficult concept to grasp, but hopefully Logan can come on and really break it down as best possible. But what I want to understand from this conversation is, what is a useful proof of work network? Why is it important? What is Nock doing? So Logan's here to tell us all about that. And without further ado, Logan, appreciate you coming on. It's been a exciting to get you on here. I've been excited for this.
Amazing. Yeah, no, well, I'm excited to hop on. Thanks for having me. Hope you're having a good day. And yeah, we've been doing a bunch of stuff today. So we actually just got listed on Kraken today. We'd been trying to do it all week, but we had some funny business with the market makers. So we had a little swap, and now we're live. Now we're live with a new market maker.
Yes, let's go. I just saw that. I saw a little video too. Oh, it's on the main Nock account. Very cool. Congratulations. What was that process like?
I mean, it was pretty reasonable. I mean, we had been talking to Kraken for a while, just because once the volume really started going nuts on in October, actually, on SafeTrade. From that point forward, we had kind of conversations ongoing with various exchanges, because I think in general they're looking for projects that people have a lot of interest in, even when they're on smaller venues. And so once we were on Base, it became way easier, obviously, to do the technical integrations. And so from there, it was just kind of a pretty natural process. Yeah.
What's what's the reasoning for this? Centralized exchanges, I remember listings used to be this huge thing. I think since then it's kind of like gotten to be less of a big thing, but of course they do add a nice liquidity layer. So when you were thinking through this process of listing and, potentially giving tokens to these market makers and everything that comes with this, it's a long process, sometimes expensive. What was the thinking about, okay, Kraken's a really good one to go with. It's going to deepen liquidity. Like, what was, I guess, some of the benefits that come with this listing?
Yeah, well, I mean, at the end of the day, when you're building one of these decentralized money protocols that's coordinating computation, and we can get into coordinating computation and incentivizing and all that, there's multiple angles to it, right? There's the technical angle of, does it work? Is it secure? Is it fast? Is it blah, blah, blah? There's the incentives, but of course there's also, can people access it? If people want to hold the asset, or if people want to trade the asset, or if people have some thesis that relates to compute networks and proof of useful work, can they access it? And obviously the space has come a really long way over the past few years. I mean, a lot of funds and a lot of institutional capital is more capable of interacting with direct on-chain thesis expressions than they have been previously. But at the same time, I think that there's a lot of value in being able to, particularly on the larger venues, to be able to basically both have kind of a DEX expression, but also have a place for people institutions mainly, to be able to access liquidity at a larger scale, basically.
Nice. Okay. Interesting. Thanks for that answer. Congratulations on that listing. I'm glad we got it right as we went live on the show.
Yeah, right on the dot.
Let's go. Funny. It is. With that being said, Logan, let's kind of start at the top, get a little bit on yourself, and then we can jump into Nock Chain and Nock and everything that you guys are building over there.
Sure. Yeah. Well, I have an engineering background. I've been programming since I was 12. I went to Georgia Tech. I dropped out at the beginning of my senior year of a computer science degree because I was basically really into Bitcoin. And at the time, I was like, man, I really have to just be working basically in industry and on, and in these decentralized projects.
How did the parents feel about that?
I actually called my mom when I boarded the plane to San Francisco to go to my job. I got the job lined up and then called my mom. I was like, hey, I've dropped out of school, leaving. She was really mad. I was like, sorry about that. Oh, no.
Well, at least you had a job lined up. It wasn't like oh my gosh, I'm going to get into this industry. This is awesome. I'm moving to San Francisco, dropping out and just wishing on a dime here that I stumbled across something, but you actually had a job lined up. So it helps your case a bit.
Yeah. I mean, it wasn't that risky, all things considered, but I mean, different mindsets around these things. Right.
Sure.
but anyway, so then after that, I worked at the Urbit project with Curtis Yarvin on the whole kind of like decentralized personal server concept for a number of years. And then after that, I transitioned into working on zero knowledge proofs. So I started working on this company called Zorp that was building zero knowledge proofs. And they were all built around the Nock VM, which is where the Nock in Nock chain comes from. So the Nock VM.
When is this, like timing wise?
Okay, so I started working at on Urbit in 2018, and Urbit invented the Nock instruction set, which is this like really minimal computer language, you know, and it's basically meant to be kind of a compiler target, similar to WASM or some of these others that people can basically write programs for that compile to, and then they can kind of run in this virtual machine. And started working on that in 2018. I was working on the product team as kind of a technical lead. Then I started working on Zorp. I founded this company called Zorp in 2022. And it was oriented around building zero knowledge proofs of the Nock virtual machine. And so I had this idea that, hey, maybe we could apply this crazy new cryptography to this kind of super funky computer language, and it would probably be really efficient. And so I found this math PhD that had been fired from his university because like he made funny jokes on the internet. Mm-hmm. And I was like, hey, I can give you a job and we're going to do this crazy cryptography. Basically we got started, and turned out you can make super efficient proofs of computer programs made around Nock.
And so the idea of ZKPs, for those that are unfamiliar, is basically proving something is true without actually, or maybe you would be best to describe this and explain.
Go take a shot at it. It's kind of around.
How I understand this is, zero knowledge proofs are basically, it's a network that can confirm something without actually verifying the source or verifying, I guess, the identity of what's sending it, but verify that it is real. So it's a good way to preserve privacy. That's the general gist of how I understand. Of course, I'm not iterating on zero knowledge proofs, so I don't actually understand all the deep technical understandings of it, but that's my general broader idea. Is that accurate to some extent?
Yeah, it's pretty accurate. So zero knowledge proofs let you commit that some computation happened. Like, hey, I ran this computer program, I gave it these inputs, and it gave me these outputs. So similar how you can hash a file or hash a message, and it gives you like a kind of fingerprint of that message or of the file, right? And it hasn't been tampered with. Nobody changed anything about it, right? Zero knowledge proofs let you commit that a program was run and nobody did any like fake program steps. Nobody like cheated the program or anything like that. So it's like, I've got some algorithm I'm going to run, and I can prove to you I actually did do that. So, I verified somebody's ID, or I really did do this LLM response, or I really did go request that web page, and here's what they told me it was, right? Stuff like that, like actual like whole things a computer did, you can verify the whole thing. And
while preserving the privacy, right?
Yeah, you can preserve the privacy of it. You can, and also you can compress it. So even if it was a big program or you did a bunch of stuff, you can compress it into this tiny little like itty bitty file and pass that over, and they can verify it super fast, even if you did a ton of work.
Got you.
Interesting.
So you're doing this work, you're working in zero knowledge proofs, and Chill, maybe jump in right after this question. And of course, you find this PhD and you guys get to work. How does this lead you? And at this point, you mentioned this is 2018. How does this lead you today, where we are in 2026, to Nock?
So I was working on Nock at the Urbit project from 2018 to 2022. And then in 2022, I started working on zero knowledge proofs with the Nock stuff. And so basically, then 2023, we had actually gotten some big breakthroughs of like, hey, actually, we can make zero knowledge proofs 10 times faster than RISC-V programs can with the Nock VM. Which is pretty crazy, because zero knowledge proofs are pretty expensive to make. They take time, and they take kind of bigger computers to do. And so a big, an order of magnitude and advance is actually pretty meaningful in terms of how practical it is to run. And so we were like, okay, well, let's look at this industry. Who's doing anything with this and actually shipping products? And it seemed like there was some stuff going on, StarkNet's doing some stuff, and some, there were a bunch of layer 2s trying to kind of like have secure layer 2s that don't require multi-sage and stuff like that. But I looked around and there wasn't really a lot happening other than that and privacy. And And it seemed like one of the problems was that people were having problems basically incentivizing people to actually make these proofs at all. So basically there hadn't been these like big industry applications yet. And so kind of similar to how back in the day, like people didn't really know what to do with GPUs. They were just made for video games, right? But once the GPUs started being produced more and more, right, basically we figured out, okay, well, they can also mine crypto. Well, they can also do AI stuff. And then we had a bunch of GPUs doing stuff for AI. Then we've been able to have all these advances. And so the way I thought about it is what we need to do is we need to incentivize hardware for ZK. And so how can we do that the fastest? And so the natural answer that I came to was proof of work. If we can incentivize people to be making lots of proofs, then we can basically bootstrap custom hardware. And that was the kind of initial concept. And then I got hooked up with some other researchers that had done research around how to actually make useful proof of work enabled by these zero knowledge proofs. And so then kind of the Notchain idea was born.
Okay, and then to touch on this, at this point when you were familiarized with useful proof of works, was this, I guess, prior to the AI explosion here? Was this a different type of useful proof of work? Or is it like it just happened to work out really well with the timing of AI and all these data centers being built? Or just maybe, I guess, enlighten me on that.
Yeah, so this was before AI was like, really super taking off. Obviously, people have been talking about, kind of an AI takeoff, especially in the Bay Area for a long time, kind of in the whole rationalist circles and all that stuff, way before it was obvious that was actually what was going to happen, I mean, at the end of the day, like the proof of useful work idea is actually more general even than just for AI, because the idea is just, can we get computers to do something useful that we can verify that they did it? And then can we incentivize it? And so some of the like kind of decentralized physical infrastructure networks like Helium are kind of similar in that respect, even if they don't work exactly technically the same.
In the sense that you do a task, you get emitted Helium tokens?
Yeah, so Helium has you go buy hardware for doing, wireless networking. And then basically you can provide spectrum that phones can connect to and literally use it as a cellular internet service. And if you run your Helium node which is literally like a wireless, basically tower, right? Similar to what you see AT&T and Verizon put up. If you run your little hardware thing, then you're providing an actual useful network service. And so I forget if it's T-Mobile or whatever, but like they offload,
I believe so,
some of their capacity over to Helium, basically. And so they're actually doing useful work in the real world that's incentivized by their token emissions. And so for me, I wanted basically to use these crypto incentives to incentivize real computers to do real useful work.
So what's the grander vision? So you now have that framework. You've basically proven that it works. It can be done. You can kind of verify this useful work. Where do you take that now?
Yeah. So what we kind of started with is just in bootstrapping a network that can scale as a proof of work network securely. So doing all those things kind of at the same time, where you can do a lot of transactions and do a lot of kind of larger kind of private applications and things like that on a proof of work network is more difficult in some ways, because it's a more adversarial kind of networking setting than proof of stake, where the nodes are kind of authenticated with each other as validators. And so we started out by basically wanting to build a real hard money secured by proof of useful work. So in other words, a fixed supply, hard capped currency that you can privately and securely transact with at scale, at large scale, and that you can do real finance with, that lets you tap into and coordinate computers. So instead of just having kind of DeFi as like, okay, let's just trade tokens, or just having, kind of a single purpose network, like we're just going to incentivize storage, or we're just going to incentivize wireless networking, or whatever. What we wanted to do is we wanted to build basically a substrate where any type of proof of useful work could be incentivized.
Interesting. No, please continue. Finish your thought.
And so it's one thing to incentivize the computers. So we want to incentivize them to secure the network by doing useful work. And that provides them a subsidy. But what we also want to be able to do is once you can verify that work and incentivize it, well, you also have a capacity to coordinate it, to orchestrate it, and to pay for more stuff, basically. So in other words, once you can incentivize and verify that computers did the task and pay them to do the task, then you can start to coordinate and orchestrate it. And so you guys probably know that we're launching an AI compute network in early July. And that's going to be kind of our first big compute network that follows this proof of useful work model. Well, it's going to start out by verifying that inference was done properly, so that for some particular model, you did the matrix multiplications properly for that model. And it's incentivizing and subsidizing existing inference providers.
So talk to me about that process, because I think this is the big thing. It's like once you get to this point, it's like, all right, now we have these massive data centers going up, massive inference providers, and it almost seems like there's no reason not to participate in this network because they're already providing this inference, they're already solving these math equations, matrices, or whatever the correct word terminology is. Why not tap into this network? And I think that's where the big vision starts to set in, and it's like, okay, this could be huge. And so that's what I want to get from you. What are the next steps? You kind of go live with this. How do you get to these data centers? How do you get people to start using it? What's, I guess, the strategy and the vision there behind it?
Yeah, no, it's a good question. So what we're really looking at with all this is we're unlocking a new revenue stream for these inference providers for work that they were already doing anyway. And it's basically free for them. So I've talked to a lot of data center providers, and all of these guys think about what they're doing basically as funny as it sounds, commodities trading. So they think about this because they have to be thinking about the depreciation schedule of the hardware that they've got. They've got to be thinking about with their hardware choices, they've got to be thinking about where the spot market for that hardware is moving. And a lot of these guys are only going to get 35 to 45% usage of the hardware over its lifetime anyway. So like they only have somebody renting it 35 to 45% of the time. Well, what do you think they're doing with it?
Who is this person? Is this like a data center or
data centers that have a lot that are buying and providing hardware rental services?
Really? They're only at 30 to 45% usage.
Yeah, that's right.
Wow.
Okay, so what do you think they're doing with those computers the rest of the time?
Man, I'd have no idea. Hopefully they're not sitting off just idle.
Yeah, they're mining crypto.
Wow.
They're mining crypto. They're already doing this. They already do this with BitTensor. They do it with I think it's GeoNet. Sorry, I can't keep track of all of these things.
Yeah.
But I talk to these guys and they're always like, yeah, we're doing this new one. And I keep talking to these guys and basically they hate all of these tokens that have the like infinite supply thing where it's like not really like a commodity that they can kind of understand and use.
Yeah.
But basically it's like at the end of the day, if you can create a hard money that's secured by useful computation and you can tap into the largest and fastest growing pools of useful computation that are happening, what you have is an extremely secure distributed asset that's backed by just an insane amount of energy. And the best thing about all this is once you can start coordinating and orchestrating the compute you have on your network, because if it's useful compute, then you don't have to just basically have it be doing useless stuff sitting there. The useful stuff can actually take part in the network. So you can start doing basically trading of H100 futures or B200 futures, or you can actually pay somebody to do inference for you. And so you unlock a lot of capabilities, or you can do distributed training runs. You unlock just massive amounts of capabilities because you can verify the work was done correctly. They're already incentivized to be interacting with what you're already doing. They're already on the network. And so every time you unlock a new capacity, you're unlocking that capacity for this massive pool of hardware that's not being fully utilized.
So give us. So I have two questions. That was a lot, and that was honestly mind blowing what you just mentioned. But just to dig into that a little bit, I have a question around the size of demand from these data centers. Like, say I'm a person that has no idea, like the size and scale that these data centers operate at. Give me an idea of how big of a market you're tapping into here with the demand that comes from hardware that isn't being used.
Well, I mean, the best part of it is that it's also hardware that is being used, right? It's hardware that is being already used for inference, can be merge mining Nocchain at the same time, right? So previously it was only the hardware that was being unused. Now it's the hardware that's being used and the hardware being unused. So basically they can be mining Nocchain when they don't have any requests, and they can be mining it when they do have requests, because the inference work that they're doing, the useful inference they're doing for their customers, is paying them not to.
So the other question I had was, I think you might have answered it a little bit towards the end of one of your previous comments, but just to make sure I'm getting this, people can orchestrate this useful compute to do what? Like orchestrate it to do what exactly?
Distributed training, decentralized inference. They can be using it for other use cases as we launch other compute networks. So you could imagine, say we launch a useful compute network in the future that's verifiable, say DNA sequencing or verifiable biology, research type stuff. Like anything that you can verify, you can turn into a compute network.
So is it safe to say that you're building kind of like the base layer for like compute markets?
Yeah.
That is absolutely wild. I'm sorry. So take it.
It is wild. And I want to ask on this too, because you mentioned, these data centers are already doing some mining. And if you guys are familiar with mining, basically there's going to be networks and you can find what's got the most value to mine. And so you're all often jumping around all these different tokens. And like they mentioned to you, Logan, they didn't really like the inflationary nature of some of these tokens. They couldn't quite wrap their head around it. My question becomes, why is Nock so much more appealing to these guys? Because they do have options. Like we've seen Pearl pop up, and I think you or someone on the team publicly was like, talking about Pearl, and there's a back and forth there. And so we've seen these other proof of work networks as well. What makes Nock more appealing to potentially edge out some of the competition there?
Yeah, no, it's a good question. So for the record, I like Pearl, which is why I'm vampire attacking Pearl to take all their miners.
Hey, at least you're honest.
Yeah, no, I like it. They did good work. They did good research, but it's a Bitcoin fork. It's a Bitcoin fork with a cool proof of work puzzle that uses zero knowledge proofs for proof of useful work. So it's like, okay, you're using zero knowledge proofs for proof of useful work to incentivize computers to do useful stuff. It's like, it's the easiest thing in the world to just turn into a compute network on Nocchain. It's one of those things where it's like, I wish they had just come over to me and been like, hey man, we want to launch a new compute network on Nocchain. But anyway, the main thing here is basically, the idea is, effectively, when we launch this compute network, it's actually going to be compatible with Pearl mining. So you'll be able to be merge mining Nocchain and Pearl at the same time. So it's kind of funny. I mean, inference providers are getting like a double subsidy. So
wait, they can double dip. Like, does it still get the same output to you guys? And do they secure the chain as much? Could they do this to Pearl, Nock, and then 10 other?
If there were compute networks that were compatible, yeah. But right now it's just Nock and Pearl.
Interesting. Okay, so basically what happens here now is Pearl's getting a ton of attention, Nock's getting a ton of attention. It's kind of like a rising tide. You're not even really competing, because it's like people that are using the Pearl network might as well tack on Nock to that, or people using the Nock network might as well tack on Pearl to that, and they're just kind of double dipping.
Yeah, exactly. It's a subsidy, right? And so, I mean, it's funny to talk about it as a vampire attack, and I think a lot of the Pearl people seem salty about it and stuff. But at the end of the day, I mean, it's really just there's this pool of compute, and we want to have access to it.
Interesting. So talk me through that. I guess your go-to-market strategy.
Yeah,
potentially.
No,
go ahead.
Yeah. No, please.
I mean, just talk me through the go-to-market strategy, right? Potentially you're tapping into some of these other useful proof of work networks and vampire attacking some of their users. I mean, you're going out to data centers, you're having these conversations. Like, where do we go next, right? You have this network, you've explained it to us. It makes sense why the data centers should be participating in this. What's the go-to-market strategy? Who's that target prototype of the person you're targeting, and what does that look like?
Yeah, so really this is a vertical integration play, right? Okay, so at the bottom, there's a bunch of hardware. Some of it's not even tapped into. Like the spot GPU markets for like 4090s and 5090s and 3090s, they're not efficiently utilized at scale to the level that they will be in the future. So like, I don't know if you know this, but like NVIDIA licenses only their enterprise GPUs to data centers.
Okay.
And so if you as a data center want to run their consumer GPUs, which are the 3090s, 4090s, and 5090s, NVIDIA will take your license and not let you buy GPUs from them anymore. They say you can only run the enterprise ones. And so on a like dollars per compute basis, 4090s and 5090s are incredibly efficient, just super crazy efficient. And so you kind of, from a memory bandwidth perspective, they're more limited, right? But basically there's a lot of useful work that these consumer GPUs can do that can't just run in these regular big old data centers due to the stupid licensing terms. And so what I try to think about when I think about these decentralized networks coordinating this compute is, let's take this base layer, which is all the computers which are running in the world, and let's make a layer that coordinates access to it. And then we can build products on top. So you can build a product that lets people do a training run for a model. You can build a product which is a decentralized inference service that taps into that underlying compute. You can build a product that, say, is a fun little agent chatbot or whatever, right? But at the end of the day, you basically end up with, you've got your coordination layer, you've got the computers, and then you have products on top.
So Fumbler's got an interesting question, Chill. I know you had a comment, but I have to ask this too. Sure. He said, what happens to the overhead if you start stacking and mining on 5 chains? Like, what does that change? How does that affect, I guess, some of the output maybe?
Yeah, well, I mean, at the end of the day, it depends on basically the actual proof of work puzzles. And in our case, our puzzle is compatible with theirs for the AI compute network. And so in being compatible, it's free.
So nothing really changes.
Nothing changes in this case. But if you were doing something a little different, that was kind of similar, like it would probably add additional overhead, right?
So this makes me think, and on this show, we've had many decentralized compute networks that are building in the space. I mean, just right before us, we had Zero, who's doing the sharding and making it so a decentralized network can provide frontier models, potentially cool technology there. And we keep having this conversation. And on some of these marketplaces, you get these, massive 60, 70, 80, 90% discounts on GPUs. Hypothetically, could someone go and rent those GPUs from a decentralized network and then go and mine simultaneously, Nock and Pearl, and actually turn a profit from renting decentralized compute?
I don't know if it'd be profitable, but I mean, it certainly might be. I mean, okay. Once you start tapping into compute that's not efficiently utilized, that can't be utilized by kind of some of these larger players, you get these, as you said, massive discounts. And I like what that guy's doing, Zero. I think it's cool. At the end of the day, I don't know what the latency is, because it's, as I understand it, it's kind of like a speculatively decoded pipelined inference between different computers, and the round trip from a networking perspective seems to me just intrinsically like it would reduce performance. But I mean, some of the benchmarks he's shown seem pretty reasonable with the 30 tokens per second and stuff like that. And so at the end of the day, I mean, I think that as we continue moving along here, you're going to see, increasing levels of kind of just innovation that is used to unlock computers people already have that just aren't basically making money for them.
Really interesting. Chill, I know you had a question.
Yeah, I'm really blown away by this, actually, because I've read about you guys, but this conversation and the way you're explaining it is just, it's mind blowing to me. But one thing I wanted to kind of talk a little bit about was traction that you've seen so far. Obviously, you're approaching these data centers, you're in conversations with them, and this isn't like a new product. It's something that's been working already. So talk to us a little bit about, traction that you've seen so far, usage of the network, etc.
Yeah. So We launched a little over a year ago. So on May 21st, 2025. And we launched with what we called DumbNet, which was basically our nod to, okay, the work is not fully useful yet, right? We're doing ZK proof of work, but it's not fully useful, so we're going to call it DumbNet. And so this is basically this AI compute network that we're launching in July is us moving past DumbNet. Since then, we've done a lot of technical upgrades to the transaction engine to make it more secure, to make it more private, to unlock, to start being able to move toward being able to do full DeFi on the chain, which is, I believe, coming later this year too, because we've got one upgrade that basically unlocks privacy, DeFi, and a bunch of other things all at the same time that's targeted for Q4. But basically, we're moving past DumbNet on the proof of useful work angle. And so when we first launched this a year ago, we were incentivizing ZK proofs, and we quickly became the largest proving network in the world. But the computers weren't doing useful proofs yet. And so we're going to start doing useful proofs just very, very soon. But to give you an idea of kind of the adoption from a mining perspective, on the network at any given time, we have between 10,000 and 20,000 consumer GPUs, so like 3090s, 4090s, and 5090s, running between a variety of mining pools and also just individual kind of large mining groups. And so we already have, frankly, like a massive amount of compute on the network. And if I had to just predict where it's headed, I suspect that once we launch the AI compute network, that this time next year we'll probably have 5 to 10 times more.
That's really incredible numbers. Can I ask you about like some of the revenues from this and profits, and how this kind of ties into like the token and token holders? Great user base. What are like the economics of the company like? How do you guys turn a profit? Could you break some of that down for me?
Sure. So as I mentioned, I founded Zorp in 2022, and Zorp started out basically just as a place for doing research into zero knowledge proofs, and we didn't really know how we were going to monetize it. And so then we determined that we were going to launch Nocchain, and so we put together a seed round for that, and then we closed that in January of 2024, led by Delphi Ventures with strong participation from North Island Ventures, CMCC Global, etc. And from that point forward, Zorp effectively acted as an incubator for Nocchain. And so we launched Nocchain, and then we participated pretty heavily in the mining for the first 6 months or so. And frankly, the mining got to be extremely competitive very fast. So I mean, even a month after launch, I mean, we were only 25-30% of the total mining on the network, and it went down from there. But basically, the way that we went about things is Zorp captured a bunch of tokens, and then basically set out to continue basically working on the protocol to make it more valuable. So
your upside here is in the tokens you hold or the network.
Yeah, that's generally the case. And so, I mean, as things move forward, I mean, there's already other entities in the space, and there's actually kind of a lot going on right now in terms of kind of entities in Nocchain forming and kind of stuff around governance, etc. I mean, just to kind of give you some insight around what I mean by that, a few weeks ago we formed the Nock Community Co., which is a non-stock corporation. So that's generally the entity used for things like nonprofits and things like that. But I'm not saying it has a 501c3 status or something. But basically, we formed the Nock Community Co. as kind of a formalization of what we previously kind of called the foundation, which was just like kind of a collection of the companies that work in the space that have various kind of governance things they do, such as like holding the bridge keys to the base bridge, and as of the latest upgrade in May, administering the protocol fund. So you guys mentioned things like when we launched on the exchange recently, like where did that money come from? Well, it came from the protocol fund, because it's like what's like good for the protocol? Well, having liquidity and being, having greater visibility and access. Maybe one single company is not incentivized to do that, right? To like go pay and do the, go through the motions of that. But but the community benefits. And so at the end of the day, kind of we've been basically like getting things ready to kind of grow the community and kind of professionalize things to a greater extent from here.
And with these communities, are like the decisions governed by votes, and like token holders kind of form these communities? Like you mentioned, someone's in charge of the protocol fund. Is that in essence just a bunch of token holders that have, enough sway to make votes and decide what some of that fund's allocated to?
Sure. So it's not a DAO. It's not a DAO.
Okay.
To be frank, I can't say I'm big on DAOs.
Okay.
I think
why you think there needs to be an owner operator to make some of these decisions?
I think in general, across all of history, when you don't have an executive making decisions or a small like kind of group making decisions, you basically are fucked.
Yeah.
I mean, honestly, you know what I mean? Like, and so the way that the Nock Community Co specifically is governed is effectively there's 4 directors, and the 4 directors vote on how to use the funds, and you effectively need 3 out of the 4 votes if you're going to do anything. So the idea is like, if you can't get 3 out of the 4 companies kind of that work in the space to agree that something needs to be done with the funds should probably just sit there.
Right. Well, I think it was Steve Jobs that famously said surrounding like the iPhone or something, people were asking him, why are you building this? He's like, well, frankly, the people don't know what they want. They don't know what they want. You just have to give it to them, and then they'll like it over time. So I don't know where I sit. I don't know if I have an opinion on DAOs, if I think it's better. I think maybe in some cases it's good, maybe not one size.
I think proof of work is the only DAO that works. It's like if we want to do a protocol upgrade, we have to get the miners on board. Otherwise we can't do it.
Oh, got you.
You know what I mean? So it's like there's some things that the Nock Community Code can do, right? But like we could upgrade the bridge as an example, right? Like we actually have an upgrade we're shooting for in the next couple of weeks that'll enable withdrawals back from base to Nockchain from the bridge as an example. Like we can do things like that. But in terms of the protocol itself, it's like, well, it's the people writing the code, it's the Nock Community Code, it's the miners, and if at the end of the day, if nobody minds it, it's not Nockchain.
Sure. Could you tell me a bit about the token? Obviously, this is likely going to be a network token and going to have some of the effects on the network. Could you maybe talk me through where the token comes into play in this whole thing? How miners can benefit from the emissions, if they're staking rewards, like what this entire thing looks like. And not to double up too much on questions here, but Crypto Jones also asks, what is the expected yield using Nock? So I'm not sure if that's a 2-pronged question for you, but
that's a great question. There's no staking and there's no yield.
No staking, no yield.
But there is a fixed supply of Nock that will ever exist, which is 2 to the 32, and half of it already exists.
Okay, so you guys chose to go with a fixed. Going with a fixed supply is interesting. When you launched this, it wasn't very common to do that. I think that fixed supply model.
Yeah, the like hard cap. Yeah. So I mean, at the end of the day, I mean, BitTensor has a hard cap supply, Bitcoin has a hard cap supply, and in general, I really do believe that one of the most interesting things that you can build in this space is not just the technology, it's actually the economics of a hard money backed by real assets. So backed by real energy that secures the network. So it's secured by real computers that are doing things in the world. And particularly once you can build kind of additional uses for that, and additional demand drivers, like at the end of the day, like people do prefer private money to non-private money. And similarly, people prefer to be able to, coordinate useful compute to not coordinating useful compute. So if you can access kind of new markets and new financial instruments like compute futures, as an example, it basically starts to blossom, and there's a lot more that you can do with it. I mean, I think a model that we really are inspired by for the compute networks on Nockchain is BitTensor's subnets. Now, BitTensor's subnets are kind of like proof of stake validators for each subnet. So it's a little different than our kind of merge mining proof of work model. But in terms of like the way kind of that coordinates the community around giving entrepreneurs ways to launch new ways to tap into compute and to make money from that, we're really aligned around that.
Got you. Okay, so maybe if you could tie that token conversation up with a bow. Someone asks, what's the value in holding Nock token? Where does that play into the network? What would you, I guess, say in a one-line short answer?
I think that right now, I mean, Nock is a hard money. It's going to be private and programmable soon, with the ZK update that we mentioned that's coming in Q4. And then on the other end of things, it again also through the compute networks approach, we intend to make it possible to coordinate and orchestrate useful compute and trade compute through these instruments. And so I think in terms of thinking about the Nock thesis, I'd say it's kind of the purest expression of a proof of useful work thesis, in the sense that compute networks can be launched for any type of proof of useful work vertical.
Got it. You guys mentioned you raised a seed round. When you think about runway and funding, are you guys planning another round down the road? You said there are still some tokens yet to be emitted. Is there an equity component to this business as well? I guess curious to understand the entire look at that.
You know, honestly, what we should do is hop right back on here in a few months, and we can have wonderful conversations about the equity.
Oh, this is something you guys are thinking about. You can't leave us on a hook like that.
Oh, I've got to though. I've got to.
Oh, Logan. Okay, well, it'll give us something to think about, nonetheless. Any answers on that? Are you guys seeking further funding? Is runway solid? General closing that circle.
Everybody's working on the project, incentivized and happy.
Solid. Solid. We'll leave it there. We'll leave it there. One thing I saw in the chat here, Pushy Knox says, I saw a lot of talking about early July on Knox TG. He wants for you to talk about the plan on adoption for Knox Chain. Apparently there's some exciting things coming. I believe you mentioned some of that already, but for the sake of the community, you can talk about that a little bit.
Good shout.
AI compute networks, early July. Boom.
There you go. And we dived into that quite a bit. So I don't think there's anything left there.
Well, I guess just one more to touch on it. Do you guys have that demand side lined up? Like, are you guys going to launch that and like pretty confident people are going to just instantly start using it, or it's just like a bit of a shot in the dark here?
We've already talked quite a bit with various, frankly, miners of Pearl, and they're all like, "Look, give us the code. We're going to turn it on." Boom.
Well, I mean, that sounds pretty solid. Speaking of Pearl, Kim San asks, when merge Pearl mining happening? Is that also going to be early July?
Early July, as soon as we launch the AI compute network.
Let's go.
Nice.
And then Noctism says, damn, Nockchain based. There we go. Just had to throw it in. Logan, what about roadmap? We got a lot of talk about early July. Got a lot of talk about, this vampire attack on Pearl. Is there any more roadmap that we haven't covered?
Yeah, I mean, it's just the Q4 full ZK VM upgrade that makes the ZK side fully useful. That adds privacy and programmability to the actual transaction layer. I know there's a lot of builders, kind of hobbyist builders in the Notchain space that are looking forward to that.
Very nice.
Jill, I think I've covered everything I had questions on. Logan,
I think we did the whole thing, guys.
Yeah, it was an absolutely fascinating, mind-blowing conversation. So we really appreciate you joining us. We definitely want to respect your time as well. So, but I mean, any just closing thoughts? Any closing thoughts for the stream? Any closing thoughts for the audience? There's a lot of your Noctimism community here. There's a lot of the community here. So anything to leave them with, feel free.
I mean, honestly, I had some Waffle House earlier today, and it was really good. Been
Nice.
like probably years since I had Waffle House.
All-star breakfast, or
I actually got this. It was like this, basically steak hash browns with like jalapenos and onion and tomatoes. It was really just fantastic.
dude.
I got one last.
For the
I
non-Americans,
got one last question.
It's a good place.
I got one last question for you to wrap this, to bring it all full circle. Is your mom proud of you now? You dropped out of college and now you're like a giga chad in the crypto space, and you're building this like massively important compute base layer to a compute market. It's like, is she proud of you?
I mean, yeah, I definitely think so. But I mean, at the end of the day, I mean, I come from simple, like North Georgia mountain folk, man. Like I come from, up in the hills, right? So it's like I don't have that much of an accent, but the rest of my family does, man. And I mean, at the end of the day, it's just like she's happy,
Tradition.
I'm happy, and that like I'm like providing for my kids and stuff. But it's like, what am I doing? I don't know. Like I'm doing crazy
That's all
stuff
you
with
can ask for.
computers, man.
So when she says, what are you doing, son? And you're like, dude, I'm doing ZK proofs. And she's like, what are ZK? What's ZKs? What is a, useful proof of work chain? Are you just like, Mom, it's working out? Or are you giving her the full breakdown? Could your mom hop on here and give us a ZK proof breakdown?
No, I mean, she could say something about notching, but I don't even think she knows what we're doing, man.
Valid. We love it. So here's what we'll do, Logan. We got a lot to look forward to here. July, it seems like it's going to be a big month. In a few months, you said we'll have a different discussion on equities. Let's get you back on, talk about, I guess, hopefully the smashing success of this launch you have coming up in July and maybe some of that equity discussion. So to be continued on the conversation here.
Awesome. Hey, well, thanks for the time, guys, and have a great rest of your day. Peace.
Appreciate
Thanks,
it.
Logan. Take care. Knock, knock. Holy
Knock, knock.
moly. I'm
How
not
does
going to
knock
lie.
make moolah?
How does knock make the moolah, Crypto Jones? Yeah,
he
that's
mentioned there was a company that incubated it. Yeah, I don't know. I guess we never really got that direct answer.
you know what I forgot to ask Zero about? I know, just kind of going all the way back to that first interview, forgot to ask him about the Virtuals relationship, man. Forgot to ask him about the Virtuals relationship because I saw there was a tweet about Virtuals, kind of like a tweet, about Virtuals kind of pushing their stuff. I forgot to ask about that whole thing. I just thought about it, but no, Knock was a great interview. Absolutely, like blew my mind around compute markets. I mean, if anyone knows, if you watch this stream, then we've talked to Squire quite a bit, and he's kind of building that kind of inference compute markets. He's building around that, but I think this is, I think his focus is like anyone can transact, right? Like anyone can can buy and sell inference, but on this side, this is more of I don't know if
go
to
hand
say
in hand.
Yeah,
This
is like an enterprise.
Yeah.
This is more like an enterprise offering. It's not just like for just your average user. It's just for like you said, like data centers, and they're providing computation to do useful compute. But then on top of that, you can like orchestrate, and basically, Helium is only one of the many use cases that you can get out of the Knock, that you can build on the Knock kind of infrastructure technology layer that they have. Like they already have the compute, they already have the energy, they already have the proof of work side, but now they're building. You can build so many other things on top of it, and I think that's what's really, really beautiful about Knock.
Yeah, the thing about Knock that's going to be interesting is just, I guess, seeing adoption. Like in theory, having all these data centers, and he even mentioned consumer GPUs as well, kind of coming on here and using this. I think what was fascinating to me was to hear that 30 to 45% of the time is when these data centers are actually using their inference to, do AI tasks. The remainder of the time, they're just mining different chains. So I guess the biggest thing is going to be, all right, let's see how adoption is. We're going to kind of vampire attack the Pearl network. If they can continue doing what they're doing on the Pearl market, they've already kind of gotten over the hurdle of getting around and understanding how they're solving and securing a network on Pearl. It's very easy for them to just plug in Knock. It's not like much of a hurdle for them. So very easy target audience there. But let's see how adoption goes, right? So, next month, towards the end of the month when this comes around, can they start successfully getting some of those users to secure the Knock network? Are we seeing data centers come on board? In theory, okay, it makes sense. But is the adoption actually there is going to be the biggest question. Lots of stuff that was really cool that I learned from that conversation, though. So super fascinating.
Yeah, I have a sneaking feeling that Knock is going to be a very, very big player in the future. I have a sneaking feeling that this is going to be not only in crypto, but widely used, widely adopted. I have a sneaking feeling. Really love the founder as well. Freaking Chad, dude, like just absolutely passionate about what he's building, and obviously he knows a lot about the tech side of things. All right, your Zero interview just tanked the chart. Let's look. Let's look at the
It's a
the zero
very
chart.
difficult concept to understand. I mean, we
It
have a
is.
sophisticated audience here, and I think frankly, at the end of the conversation, it really started to click. But there's a lot of people that probably tuned on that maybe were lost throughout the entire thing. We have a sophisticated audience, but it's difficult to understand, and it's not. It makes sense to the smart people. I mean, we see, I guess, the right people, Sammy and some of the other guys on Twitter talk about it. Yeah, I mean, ultimately, what happens? Ultimately, it comes down to this one thing. It's people want to use the frontier models. They want to use the best models for coding, for whatever it might be. Right now, that can't be facilitated by decentralized networks because it's the GPUs are not powerful enough to power those. And so what you have to do is you have to shard it to go through multiple GPUs. And there was a big bottleneck there with latency, and now they've changed that situation around, right? So even then was a poor explanation. It's very hard. If he can get it down, if Layton could get this down to like a one-liner to explain to people to where it's very simple.
Yeah.
I think the assembly line makes a lot of sense, right? AI models are predictive. So what they do is they basically predict the answer beforehand and they send it through and everyone confirms. And if it's right, it goes through. If it's wrong, they predict another one and it sends through again. And this, helps with the latency a lot. Very difficult to understand, but I think the idea is revolutionary if it can be implemented correctly, of course, with the thinking that I can put my GPU up for rent. But instead of the inference that people think they can get with it, which is just not tier 1, not Frontier Labs, I can actually now rent out my spare inference, idle compute, and provide frontier models. And that's what people really want. And of course, it's not just going to be me. It's going to be me and like 8 other people verifying this and making this work. But they have had $15,000 in buybacks. You can stake the token for compute, which of course you can go sell on UsePod. So this might be an opportunity here for Zero. I think people are maybe misunderstanding it because it's a little more complicated, to be honest.
Yeah, I think that's the crux of it. And we were also talking about Zero in the Discord yesterday, and I'm going to say exactly what I said in the Discord. And I think I was talking to Top Fumbler. So he can vouch for this, but basically I said, look, the pivot is all the way sub 2 mil. If you guys look at the chart for 3, and maybe I can pull that up here in a second.
And again, with Zero, we went on a crazy run from 200K to 14 million in a few days, right? So it's got to cool off.
And that's basically what I said. You have this like massive run up, and we're talking like run up from, look, the low here was like 500K. Look, we really started this run all the way down here, and literally from June 11th, it was at 158K, June 11th to June 20th, I believe. Yeah, to June. So basically in like a week and a half, almost, you went from 150K to 12 or to 14 mil. Technically, that's 100x. You know what I mean? Technically, that's or close to it anyway. Yeah, close to it. So you have to cool off, and like this played out with the 3 chart. And if we go down and we look at the 3 chart, this kind of played out here as well, where you have this huge run up from this is at like sub 300K. You have this huge run up to basically like 16 mil, and it just tanked, and like now it's kind of consolidating, and I'm assuming that it's gonna go ahead and reverse. So I think in a similar way, that's what we're seeing with Zero, is this huge run up from a low market cap. It's going to come down, it's going to settle in the pivot, and then it's going to basically kind of dilly dally before it starts to go up again, right? Like this is not going to be a V-shaped recovery. So yeah, I mean, we were talking about this a lot in the Discord yesterday, so I figured I'd bring that out.
Let's jump into Kled. Talk about these updates real quick.
Yeah, let's do it. Let me pull up the Kled chart.
All right. I'm not sure. I haven't seen this. It went live here when we were on stream. I did see the chart jumping though, and I was happy about that.
I knew you're the first person I thought of when I saw that chart.
Yeah, bro. I did.
Thanks for vouching, by the way, Top Fumbler. Appreciate you.
The GOAT. Yeah, so Cled's had a nice little rally. You can see here if you want to zoom in on that too. It came to like bottom of support pretty much. I mean, if you guys, I've had this boxed around for forever. Great accumulation zone from like the 9 to 7 million range, popped up to 14 today, whatever that is, 15 with this announcement. That being said, let me tab over here. I'll pull up my screen and we can get into what that is exactly. Let me go to Avi's account first because I think I saw a few come out. So I want to make sure I cover the right one.
Wait, is that Avi with scroll down? All
Yeah,
in
he was on
pod?
Jason.
Okay,
This was when they had this big situation with this is when they had that big conversation for someone copied Kled basically and got like a massive funding round, and Avi came out and basically ripped them to pieces. And this is Jason and Alex interviewing him on it, and they completely sided with him, by the way. But let's see this. Okay, this was posted. Oh no, this is not it. Okay, here we go. The Data Foundation posted this. They said, introducing Trace. Trace is our flagship public audit and search platform where every asset permanently registered on data network can be accessed. AI Labs can search every human contributed photo or voice sample and drill into any individual record to see the full audit trail. Okay, Trace. That makes sense about the name. Trace is where labs and regulators can filter by dataset, app, data type, modularity, and time to verify data provenance. So AI models can be trained with confidence. Again, verifiable data. That's like the whole important thing here. Of course, we know these frontier models basically scraped all the internet and they're getting sued for not verifying where their data come from. And that's what the value is in Kled. It's sourcing this data. And let me change the banner here. All right. So here, let's watch this video real quick.
Millions of people upload their data to marketplaces like Kled every single day. But when it comes time for Kled to sell this data, it gets hard. AI labs who buy this data can't publicly verify metadata,
yeah, you're
KYC information, provenance, or anything else. If they can't trust the data, they won't buy it. Introducing Trace, the first audit tool for AI training data. Data marketplaces like Kled can now seamlessly create a full registered public record of any piece of data in seconds. Here's how it works. First, each video and image is turned into an anonymous hash ID. That way, users' data is never publicly exposed. That hash ID is then automatically uploaded onto Trace, which creates a lightweight on-chain receipt of the data. Then, if any AI lab wants to verify this data record, they can easily click through it and see everything about it.
This is what's important.
Metadata, KYC information, what version of the privacy policy and TOS was signed, if the user was paid for their data properly, and a full timeline. This data is also all on-chain, so it cannot be altered in any malicious way ever.
That makes
Labs
Kled
can get this data by searching it individually.
That makes
or by
Kled a
easily doing
network
bulk
token.
export. And they can even view all the other general information about each company on Trace.
All this data is on chain.
Live today at trace.datafdn.org.
Okay, this is what I've been waiting for this. This is a big one. So again, what we understand is, and maybe I'll scroll up and read and have this here. This is a big one. So for the longest time, and if you don't understand the lore of Kled, you don't understand the lore of data, what happens here is these big models are basically signing away blank checks to get this data to train AI models on. Blank checks. They got unlimited money. They're shelling them out. And that's why we're seeing some massive, data companies just raise at such massive valuations. The issue, though, is lots of this data is stolen, to be honest. It's scraped from the internet. The person that's given it to and has not consented. It's not consented data. So what happens here is Trace, right, that the Data Foundation put out in partnership with Kled, it looks like, takes this data that Kled sources and gives a full timeline of who it's from, where it's from, if that person's been paid out, if they consent to it. It gives all the information that these data labs need to be able to buy this data, because they can't buy data that's unlicensed, unverified. So I have to license this data. And so now this allows them to do it. And of course, it seems like Kled's going to be mainly the data provider for this platform. So assuming that helps them sell a lot of data there. So very cool. Again, also note, it's all logged on chain. And this is the big thing for me. I was like, well, we have these data companies that need to verify the data. Why is this not all like auditable on chain? We should be able to see it all on chain. So it seems like this is actually the case here. So interesting. With that said, Avi puts out this tweet. Kled, the leading human data marketplace, has officially partnered with the Data Foundation to onboard over 1.5 billion user records on chain. We spent the last 3 months working directly with some of the leading foundation models and labs. The single biggest point of discussion was trust. Labs have zero room for error, and consumer data is the single largest, but also most sensitive data type on the planet. Labs need 2 things before confidently purchasing a data set. 1, a clean audit record, end-to-end receipts, consent forms, and proof of payment. They need to fully trust that the data uploaded to the marketplace can confidently be licensed without consumers introducing risk into training pipelines. Exactly what I just said. Number 2, full confidence that the data on our marketplace is original, right? Not pirated, not AI generated. They need to be fully able to trust that the data uploaded is real human altered content that can be significantly enhance a training pipeline. We've been hugely against 99% of all blockchain offerings that have come our way, but things align way too well here, and we found a unique opportunity to build something great. Kled will be moving its full audit rails onto Data Network, backed by A16Z Crypto, Polychain, and other top VCs. Now, this is good. This is simply good and obvious, I think, for Kled. The instant a user uploads data to our platform, we create an anonymized receipt that automatically sends it to Trace, demo video live, blah, blah. The content hash ID, signed consent forms, full payment record, and end-to-end timestamps. Any AI lab can now verify the legitimacy of any data set in seconds, making us the first data marketplace in history to publicize its data audit records. Consumer identities are fully anonymized, hidden to users. No one will be exposed in the process. Yeah, this is big. I think this opens up the door for them to really receive a lot of inbound supply side opportunity or demand side opportunities from big AI labs. To add to this, Kled will also be supporting the USDC payouts on Data Network. This will be alongside other stablecoin options rolling out with our existing final payout, fiat payout. All of this will be fully auditable on our data. Lastly, Kled, the data foundation, will be pooling its efforts to create the world's best fraud detection protocol. We'll be allocating the majority of our time/resourcing towards creating this. Labs need to trust our data, right? We know the fraud thing is cool. I'm also joining the Data Foundation with part-time advisor role as the chief data officer. We'll be advising the foundation. Nice. So pretty much they have like in-kind support from, the Data Foundation or whatever. Okay, cool. All right. So that's a pretty cool partnership. What's this? This seems to be the kicker. The Data Foundation has invested $3 million into Kled, bringing our total funding to now $14 million. We've been extremely selective with our investors and have only taken strategic capital. The foundation will be joining some of the top venture funds and angels who have all backed Kled as the world's leading human data marketplace. Kled is on track to do over 5 billion users. Kled is on track to do over 5 billion user uploads and have over 2 million daily active data contributors this year, onwards and upwards. That's huge. 2 million active daily contributors. For disclosure purposes, some recent funding came in at close to a $300 million valuation on safe notes. All right. That's that. Let me make sure Kled AI didn't post anything else.
That's actually pretty huge, bro. It's actually pretty massive. I know you've been like credit to you, bro. You've been like a massive Kled bull, like A1 from day one, never switched up. And
sometimes for the worst. Wish I would have sold around around whatever it peaked at, 50 million, 60 million. Bought back at 7 million. Oh, that trade would have been nice. But hey, I'm happy. The trade that I did take on this was pretty good. Like I said, I managed to accumulate some down in these lower ranges in this box I've been telling you guys to get allocation in, and it's up nicely. I think that's close to, if not about 100% on that position. So that's nice. Nonetheless, yeah, Kled's looking good. I think, again, raised at $300 million valuation, 5% is on chain. So the fair value here is, around where it sits right now, around 14, 15 million. I think the question is, when do you factor in growth? I think this opens up why this is special is because it opens up the door for these AI labs to come in and actually buy this data. It's now verifiable. They got an extra $3 million check. Yeah, I think this is a great partnership. Everything's on chain. Huge for Kled. So we'll take that as a dub. Chill. Anything else you want to cover? General markets, I think you probably covered before I jumped on.
Yeah. I mean, let's see. Not much has changed since yesterday. Maybe I'll just run through like one or two things like here in like 5 minutes, and we just go ahead and close it out.
Yeah, let's do it. I mean, actually, again, on chain, You know, if I even jump over and pull up these charts again, on-chain's looking hella resilient. You guys know I've been a big proponent of Meteora. I'll probably show my Meteora thesis on this in a second, because I did, obviously, notoriously, I did post about Meteora down at the bottom that I think caused this spike up to basically double its market cap. And recently, when I made that post, revenues have been kind of flat. And it was a thesis that revenues were going to start growing a lot because of these new equities listings. I'm just going to jump into this thesis, I guess, now, since I'm already on this topic. Well, that thesis has been playing out really nicely. And if we actually take a look at their revenues, they're looking really good. So let's kind of do a breakdown here. To understand the Meteora trade, you have to understand the directions Solana's headed in, okay? Solana, for the longest, has been the meme chain. For the longest time, Solana's been the meme chain. As of last week, multiple times, tokenized assets flipped memes. So equities, spot equities positions flip memes. So Solana has now gone from the meme chain to a chain that's now supporting or the leading chain in tokenized equities, RWA. So it's kind of shifted to a more sophisticated audience, I think, which I thought was really, really interesting. With that being said, I made this post. So originally 10, 12 days ago when I made the post on Meteora, this was kind of the thesis that revenues were going to start growing on the equity side. Meteora, of course, is the main beneficiary because they're facilitating all that liquidity. Well, here's a follow-on to this. And by the way, Backpack is coming into a really nice range as well. In 12 days, Sunrise DeFi spot trading volume jumped nearly 30%, from 4.1 billion in volume, lifetime volume, to 5.3 billion by June 23rd. It jumped 30% in 12 days. Last week set a new record with 765 million in volume off the back of listing SpaceX and MU, which made up over half of all spot equities volume on Solana, even pushing tokenized assets past meme coins in daily volumes multiple times. Solana is the everything chain. So 2 things to this thesis. Sunrise volumes are popping off. Again, 30% growth in the last 12 days, from 4 billion to 5.3 billion. Solana establishing itself as the everything chain. We have equities on there, we have RWAs, and now that actually makes up more volume than meme coins. Okay, well, makes a lot of sense. SPX and MU now make up over 70% of recent daily volume on Sunrise. It's safe to say that new listings are set to drive a lot of future volume. So the question was, okay, SpaceX launched, it was a huge success, but are we waiting for the next big IPO? What goes on? It comes out that they're going to list basically all these equities, and they're starting with the most popular ones. So I think we have a lot more coming. MU, of course, quickly jumped up in volume as one of their top volumes, right? SPX and MU now make up 70% of recent daily volume for Sunrise. Of the 17 million, now note this image I have up on the screen, to facilitate, to market make all of the volume, the 1.4 billion, the $1.2 billion of added volume we've seen in the last 12 days, there's only 17.7 million in liquidity. Of that 17.7 million in liquidity of Sunrise, Meteora makes up 12 million of that and currently leads weekly spot trading volume by more than double the next closest competitor. Okay, so if we look at this image now, you see on the top here, Meteora has about $300 million of volume from the 15th to the 21st, whereas the second place has about 136 million. Okay, so more than a double in volume between the exchanges. Out of all liquidity, Meteora right here has 12 million of that. Okay, so we got Sunrise is blowing up. Solana's becoming the everything chain. Sunrise is, of course, the infrastructure that's powering it. Meteora is the market maker that's allowing it to even happen, right? This wouldn't even be able to happen if you didn't have underlying liquidity. So with that said, what does that mean for Meteora revenue? Well, revenue has also been trending in the right direction for Meteora. Last time I made this report, this annualized revenue figure was at 17 million 12 days ago. It's now up 3 million. Let's look at, if you can see over here, Meteora revenue from majors has gone from this area in May to, largely above 25K a day in some days from majors. You can also see their revenue was kind of in this trough. Now it's starting to trend up again. Revenue on Meteora has gone from 17 million annualized to 20 million annualized on 30-day revenue within a week. So revenue is trending in the right direction. It's safe to say Solana is no longer the meme chain, and no one is positioned to benefit more than the infrastructure powering it, like Backpack and Sunrise DeFi, and the venues enabling it, like Meteora. The opportunity position in leaders in emerging trends is very infrequent and uncommon. It's also worth noting that Backpack, so here's my little Backpack thesis. Backpack is reportedly seeking a $1 billion post-money valuation after clearing $100 million of revenue in 2025. So according to the team, they cleared $100 million in 2025. They're seeking a $1 billion post-money valuation. On top of this, stakers of the Backpack token are entitled to 20% of the token's equity upon IPO. So you look at this and you think, okay, 20% of the equity goes to stakers. What's 20% of 1 billion? Okay, 200 million. So right there, of the circulating supply of the stakers, the valuation of Backpack should be at least $200 million if you believe this 1 billion post-money valuation is fair. On top of that, you factor in, okay, they made $100 million in 2025 in revenue. Okay, so $2 million on chain. Revenue is all flowing back to Treasury, which token holders have ownership over. Well, there you go. You should at least be trading at a multiple of this $100 million at like a rate of 1 to 5, 1 to 6, 1 to 10 plus. So you have $200 million should really be the floor, $100 million in yearly revenue as of 2025. It's obviously growing now with equities, and 20% of equity going to stakers upon IPO. Yet the token's trading at like $125 million market cap. Doesn't make much sense. Meteor, on the other hand, has $40 million sitting in the treasury, with an additional $13.5 million already used to buy back 4% of supply. Rarely do you find a company with rapidly growing revenue trading at a 1-to-4 price to earning ratio. So here's the thing. You look at Pump Fund, and this is not a diss on Pump Fund. I think Pump Fund is a great trade when the market comes back. But you look at Pump Fund, you look at a lot of these chains that are doing really great revenue. Look at Rollbet, for example, the casino. They're doing great revenue. They have buybacks. Why is this not trading at a crazy multiple? Well, it's because the trend is actually down. So if you're investing and you're doing multiples projections on revenue, you want to be doing that on top of revenue that's going to grow month over month, right? Which is why Meteor becomes such a beautiful candidate, because revenue is growing month over month, yet the price to earnings ratio is so compressed. They have $40 million sitting in a treasury, a token trading at $80 million, and they're doing $20 million annualized revenue. It doesn't make a lot of sense. And so that's kind of the Meteora take. Of course, Meteora is on a bit of a dip. I'd say it's holding up relatively well compared to everything else. So Meteora is at 80 million. I still think this is great value, considering 40 million sitting in a treasury, 20 million annualized return and growing. And, again, shout out to Meteora. We just like them. And then Backpack again becomes an interesting one. And let me pull up the coin market cap so I can get the accurate valuation here for you guys. Because Backpack becomes a very interesting one with all things considered when we talk about 20% of equity value is going to stakers. And that's stakers based on circulating supply right now, right? So not FTV. No, not BP. Not BU, BP. So let's... Where is Backpack, bro? Oh, here
you
it
want
is.
me to pull it up for you? Okay.
I got it. No, I don't know why I was tripping on me. I stopped sharing. So yeah, also like a strong thesis for Backpack here. If you believe their $1 billion post-money valuation that they were seeking is accurate. This is trading at $135 million market cap. Again, without growth and revenue projections alone, if you take the 1 billion post-money valuation, 20% of that equity goes to stakers of the token. This is already undervalued by about $100 million, right? 20% of 1 billion is 200 million. So this is already undervalued by a magnitude of like $70 million. On top of that, you factor in the $100 million that was self-reported, not verified. They did in 2025. And now revenues are growing from Sunrise. Again, this is trading at nearly a even price to earnings ratio, which is unheard of. So I don't know. I'm looking for Backpack. I think if you get Backpack in this zone, if you get Backpack even lower, you're golden. I think this trend continues. We see Solana is shifting fundamentally as an everything chain. We see revenues even and volume being more so than memes for that. Backpack's leading it. It's got the most volume. It's got the most attention. I think this is a pretty obvious trade. So I'm in my quant arc, bro. I'm in my numbers crunching arc. I'm in my quant arc for sure.
Bro,
so
go off.
Backpack, Meteora, very undervalued. I mean, clearly undervalued. So, Chill, you want to spit for a little bit here?
Yeah, I can spit for a little bit. Top Fumbler is calling me out. in the Discord. All right. Relative strength on lit. Yes. Rambo, we gotta go through your thesis on lit. I saw your write-up. It's absolutely crazy. A couple of things I wanted to get to here.
Can we talk about this real quick on lit?
Go.
Because I saw DeFi Llama released a report on the top 10 revenue generating protocols. Of course, Meteor being like number 5 on that list. But interesting, and they did it wrong because they did 12 months. And of course, crypto is down bad in the last 12 months. So annualizing revenue from 12 months during a really high volume time is probably not the right thing to do. You want to take the volumes from last 30 days, which is why in my write-ups I'm always doing annualized off the last 30 days. Because I could sit here and say Meteor did $100 million, is doing $100 million a year, when in fact, that's because there's a lot of volume that's no longer here. But I say that to say Lighter was on there and Arrow was on there. Those are 2 I really want to look into because I've been hearing a lot of buzz around them. And I think they're doing a lot of revenue. They're top revenue generating protocols, and their price to earnings are very compressed compared to a lot of other things. So Arrow and Lit, I actually really want to dig into. Chill. If you have a thesis or if you want to go over Rambo's thesis, I'd love to hear it. Of course, this is kind of playing into the perps narrative as far as I'm aware. So
yeah, I'm pulling up Rambo's articles.
Is all this elf on your whiteboard back there, Dom? No, but I got the big whiteboard back here because I'm going to start putting it on. It's on my other whiteboard that I'm looking at across the room from me. But I did actually just move around some stuff. I'm not sure if you guys noticed. Moved around some stuff. We got Muhammad Ali over here, be the greatest, right after good old fashioned knockout. And then in the back, I got my whiteboard where hopefully I can sauce up some good stuff for you guys. But also note, I've done some magic here. The floating markers in all the corners. How's he do it? How does he do it?
Yo, I can't deal with Dom right now.
How's he do
I
it?
can't deal with Dom right now, bro. What the heck?
I'm not even touching it. Look. So, a lot of talents, a lot of tricks up my sleeve. But yeah, we got the okay.
Abe is
More of
blown
that.
away.
More of that,
Abe
guys.
is blown away.
And that's what we're here for in MCG, to give you guys, outside of just crypto, we have other talents. AGT. Yes.
I gotta say though, I do love I love the whiteboard and the be the greatest in the background. I like that. It looks clean. It looks clean.
The other setup was rough, so I needed to make the switch. Last night I was hammering all night into my wall. My wall's got like 6 holes. I couldn't figure out what I wanted to move where. So my wall looks like shit, but I got these big things over it, so it works out.
Everything works out in the end. So here's a lighter thesis. And I wonder if I can lit. It's called lit, right? That's the token ticker. I'm
yeah,
also
that's right.
See if I can pull up the chart too. Let's see, lit Coinbase. Let's do OKX. Okay, cool. I'll pull up the chart in a sec.
Shout out Super Team USA.
Shout out Super Team. Just missing a live, love, laugh poster.
Dude, that would be so tough. That'd be so tough. I need to get one of those.
All right, so here's the lighter thesis. Shout out the boy Rambo XBT. Rambo, like, man, I first met Rambo back in the bully days in 2024 AI season. Absolute Chad, been around for a while, doing really good stuff. Always has good write-ups like this. And shout out Copperino. All right. Lighter isn't trying to beat Hyperliquid. It's coming for Coinbase, Robinhood, Kraken, eventually the entire U.S. brokerage industry. The U.S. perps door cracked open May 29th between the team's pedigree, trading background, regulatory connections. It's the best position venue for the institutional money about to flow in. I own Hype, but I'd be naive to ignore Lit. All right, so here's the thesis. What is Lighter? No trading fees for retail plus iOS, Android app. And by the way, I haven't I'm kind of reacting to this with you guys in real time. I like doing this stuff. I like reading this stuff on stream.
Hey, yo, you know what? And if there's someone that bag works, it's Rambo. Bring bag working back.
Please.
Bring bag working back. You know what? I'm doing it. I've kind of You guys maybe saw my post a while ago, Inspector Dom. I've come out like there. I have not come out. Well, pause.
Wait a second.
Nonetheless, bring bag working back. I think if you have a thesis and you have a project that's valuable, bag work till the wheels
Evangelize.
fall off. Evangelize. Yeah. Rambo's done it, man. So like, I'm here. I'm ready to bag work Meteora to $5 billion. I'm ready to 100x this position, and I got size. And wait till I do it. You'll catch me in Monaco off the coast on a massive mega yacht. And you'll be like, man, I wish I bought Med with Dom. And hopefully we're feeling the same way after Rambo gets one and he can get one of the copper statues like he has. Because remember, this guy went hard for Copper Inu. So
he still is.
Going.
Still is going hard.
How'd you get that hair on a copper statue?
Yo, here's the rest of the thesis. So it's a Android app, no trading fees, sex grade, speed, self-custody, no KYC, got everything you need. Perps, spot, equities, RWAs, pre-IPO, custom ZK roll-up on ETH, cryptographic proof, backed by Robinhood.
Ooh.
What the freaking heck? Okay.
You guys know Dom's a big Robinhood bull. I'm a big hood bull.
Yeah. Yeah. Dude, that's crazy. Yeah, I'm absolutely bullish. Absolutely bullish on Robinhood. Han Ventures. I don't know. I'm not familiar with these ones. Ribbit Capital. Oh, Peter Thiel. Okay, we know him. Founders Fund. We can look into these individually a little bit later, but I'm pretty sure if we do, you'd find that they probably manage some decent capital. Team Wallet plus connections. Founder Vlad Dual. He's
that's
Olympic
some lore,
gold
bro.
medalist. What? Graduated Harvard at 18. Recruited to Citadel by Ken Griffin himself. Engineer plus quant trader.
He's a quant. Oh yeah, he's a Citadel quant.
Execution obsessed, lighter design built for institutional flow. Robinhood CEO Vlad advises lighter. Wow. Okay. Novakovsky mentored him early on. Went to the same high school.
Market consensus. Lore, bro. Good write-up, Rambo.
The talent density among engineering team is an elite level. Founders Fund. Vlad and the team are 90% why we invested. Jesus Christ. All right, so now, and Founders Fund is the one by Peter Thiel. Big catalyst. U.S. perps regulation. Can't wait for them to approve perps. Please just hurry up and do it. May 29th, the CFTC approved the Kalshi perps. Coinbase got no action relief the same day. The onshore perps door is open. Lighter is a U.S. company, not the typical offshore structure like we see with Hype. CEO Vlad is positioning Lighter to be U.S. compliant, licensed ASAP. Vlad sits on the CFTC's Innovation Advisory Committee alongside the CEOs of Coinbase, Kraken, Robinhood, CME. Holy crap.
He can lobby. He can lobby.
This guy got pulled. He has regulatory motion. So institutional grade, Lighter versus Hyperliquid. Lighter is faster, cheaper, better UI. Hype has deeper liquidity for now. Trades 39x smaller, but only 5.5x behind on volume, 9x on revenue. Both route revenue to buybacks, but at current run rate, Lit is buying back 19% of its market cap a year versus Hype's 5%. Obviously, it's smaller market cap, so they can buy more back. Wow.
This is compelling. This
is a really nice write-up. This is, again, you guys should give Rambo a follow here.
Look at that, man. Compelling. This is the type of diligence we like, bro. No fluffy buy Litcoin because we're lit. None of that BS, dude. It's buy Litcoin because this guy's got some lore. Look at his connections. He's a quant. He worked at Citadel. He knows the game of perps. By the way,
yo, Rambo, jump in the Discord, bro. Hop in the Discord, Rambo. And I'll make you. I'll give you the researcher role. Yeah, and we can get you there, bro. Come on, hop in. We need stuff like this. I'm trying to assemble all of like the freaking deep researchers in the space to actually do stuff like this. This level of bad working.
Signal.
It doesn't exist, dude. This is crazy. All right, I'm paying attention to Lit. Let's look at the chart.
And even before we jump to the chart, maybe some reinforcing thing on this is what I was talking about. Grayscale published this, the top 15 on-chain apps that by protocol revenue. Remember, we're seeing AIs AI companies do 20 to 50x price to earnings ratios. Compared to this is crazy, right? Pump Fun at a 1xp. And again, this is revenue multiples on the last 12 months, which is not how I would be doing this right now because it's pretty high considering crypto was in a better spot 12 months ago. But I mean, you go down here, here's Lighter, right? Here's Lighter. 8x revenue multiple. So it's on the top revenue generating list right here. So it's doing numbers. It's probably potentially really cheap. I'm gonna pull this up on CMC, but I'll let you also pull up the chart here. I want to see the market cap.
Yeah. Chart. So yeah, here's a chart. I mean, it look, it's bottomed out. It's bottomed out. I mean, that's the reality of it right now. Chart is bottomed. And it looks like it's reversing. And if I'm just like it doesn't have much as far as like context. I mean, not context, much as far as like price history. Boom.
So Lighter is trading at a $405 million market cap. Let me also keep doing this. I'm going to pull up the Blockworks as well. I'm going to start looking at some of the revenues here.
Real quick, I want to just take a peek at Hood. If you guys were in the Discord, you saw me break down Hood, and I told you guys you are going to get you'll likely get another stab at sub $100. And here we go, Robinhood sub $100.
Hope so, bro. I hope we get another stab sub 60, bro. I want more.
Let's see.
But yeah,
going back to Lighter. Yeah, I mean, yeah, Lit looks nice. Where can I trade this on leverage?
Jeez, Lighter. You can trade it on Lighter.
Oh yeah, that's true. Let me see.
Let me
I
pop up.
actually might look into that. Because look, I really love Hyperliquid, but I think a major unlock for them would really be like coming out with a mobile app. Like come out with like because bridging funds to like hyper EVM, and it's very technical, a lot of it. And I mean, thankfully you can builders can build out, and they can build like builders like Trojan can integrate Hyperliquid into a terminal, so that's really nice. But it would be nice if Hyperliquid themselves kind of came out with like then like an app, bro, like that you can do everything on. But yeah, go ahead and jump into the numbers there, Tom.
Yeah, no. So real quick on Lighter, Rambo, you're in the chat here. Talk to me about tokenomics. Do we have unlock schedules on this? Right. So it's about 1/4 is circulating right now, right? So there's 400 million for a 12/16, which is 1/4 of the fully diluted value. So there is still a lot to be emitted. The question is, what does the schedule look like on that? How does it work? Yeah. So I want to know about that first and foremost, because this is a lot of looming unlocks, and a $1.62 billion valuation and a $405 million valuation are very different things. So if this is going to unlock a lot in the next couple months and years, a little scary. If not, if we're going to be at 405 million for a long time, and potentially, similar situation to Hyperliquid, where we really never probably get this fully diluted value because buybacks are just going to mitigate it or outweigh it, that could be a good thing. Let's see Blockworks here. Okay. We're going to do some math together, boys. So Hyperliquid or Lighter is trading at a $405 million market cap. Let's see some of their revenues. Okay. Lighter revenue. Let's do weekly. Let's see what the trend is. Okay. Trend is down, of course, largely due to crypto, but has been holding flat here for a few months, which is nice to see. Even some spikes in there. So definitely not growing on revenue in a weekly outlook, but let's go daily. Daily's been relatively flat. This is nice to see. We're flattening out on revenue despite market conditions. Okay, let's see. Weekly revenue, 500,000 last week, 600,000 the week before, 1 million the week before, 500. Okay, so they're consistent. They're consistently doing 500,000 to 1 million basically in revenue every single week. Okay, good to know. So how much of this are there buybacks with this? Is this Hyperliquid style? I'm sure there are, right? Was that covered in the emissions don't start until 2027? Okay, so we pretty much got the bull run to go before emissions start. Going to zero. Okay. Yeah, so what's the Lighter So Lighter emissions don't start to 2027. They're doing about $500K to $1 million in weekly revenue. That has flattened out. It actually is going up a little bit if you look slightly on the daily, right? We are slightly trending up, which is nice to see. We don't want to see something trending down. What is what's the rate of buybacks here? 100% buybacks. Oh shit. So we're doing 500K buybacks a week. So let's multiply this here. I'm going to take the month. So they did $2.13 million in revenue. So 2.13 times 12. What's that? 12, 24. It's about $24 million of buybacks they're doing at this rate annualized. So they're doing about 24, 25. We'll call it $25 million in buybacks annualized. And we're trading at 400 million. So, you know, real quick, probably shouldn't have to do this, but what is 400 million divided by 25?
There's no way you're doing it.
16. So this is trading at a 1 to 16 price to earnings ratio. Okay. So I mean that's not fantastic. Ideally though, this is something that also comes back with the volumes in the market, right? So we can see on the revenue scale, revenue was much higher. You know, I'll go back to the weekly. Revenue was much higher during bull run, obviously. So we assume we get this again. Revenue starts to pick up. And again, this was part of my hyperliquid thesis. I'm not sure if you guys saw, but I'm going to go to my account again, not to give myself another shout here. But I'm going to go to my account. And here was my hyperliquid thesis because I was actually expecting a pullback on hype. If you look at hype, 15 billion feels pretty stretched, right? So again, I think the price to earnings of lit is 16, price to earnings of hyperliquid is 19. So it's slightly higher than lighter, excuse me. Which I feel like that's pretty rich for this market. They're doing 800 million annualized revenue based on 30 days. So I'm just trying to compare the two here. So based on 30 days, we're seeing so $25 million of revenue for lighter versus $800 million of yearly revenue for hyperliquid. Hyperliquid's trading at 19 price to earnings. Lighter's trading at 16. So lighter's got a beat there in that aspect. The past few months for hyperliquid have been not great though. They had listed 35 to 42% of all hyperliquid volume shifted from all crypto to largely being commodities and other assets. And yet price or the trend for hyperliquid still continued to go down here. Let's actually just look on Blockworks. Let's see how hyperliquid revenue stacks. What is going on, dude? See how this compares. Trending of what? I was just looking at this the other day. Where is the financials? All right. This is being a pain. Here we go. Okay, here it is. Yeah, so total revenue for hyperliquid. It had the same spike the same time lighter did. Honestly, hyperliquid's revenue is holding up a little bit better than lighter's. I will say that. Though although we are still stagnant here, it's about the same. Yeah, I don't know, man. I think I would want to see lighter come down a little bit. It's at a 1 to 16 price to earnings. It would be at a 1 to 8 if this comes down to 80 cents. So back to this low. I mean, I think this was probably a pretty good general range to accumulate in, assuming that this trend that we've been seeing over the last couple months continues to stay flat or slightly trend up. And we see volume really start to come back in crypto. Again, if volume starts to come back in crypto and we get to all-time highs like we did in lighter back in the previous years, well, this 1 to 16 price to earnings ratio quickly turns into like 1 to 4. And this changes rapidly. So you have two options. Either you come back to a cheaper price where lots of supply is getting eaten up, and that probably for me would be like around the dollar level, which hopefully isn't FUD Rambo, or volumes start to really pick up and these price to earnings shift to much more compressed figure. What's it worth that they partner with Robinhood? What would that partnership look like is, I guess, the question that I want to ask. Because Robinhood already offers, like, would this cannibalize Robinhood's offering is my question. If Robinhood and Lighter partnered, and now you could trade perps.
I mean, look, the reality of the situation is centralized exchanges, like we talked about earlier today with who were we on with? I think that was Knock. Centralized exchanges exist for larger capital to be able to ape into some of this stuff. But they know that their days are coming to an end. They know that the next shift, the way to capitalize is the DEX side, is the DeFi side, like the side that people actually use, because people are now moving, at least the average retail user is now moving past something like a Coinbase and going for something like, a FOMO or a Hyperliquid or whatever. So they need a product like this in order to compete and have a more well-rounded offer. So
yeah, I mean, same thing we're seeing the centralized exchanges doing, right? They're all pivoting on chain.
Exactly. So I'm assuming Robinhood, and I don't know if you know this, but in my journal in the Discord, I actually outlined. So I was talking about Robinhood, the Robinhood L2 and everything, and basically, next week on July 1st, there's going to be this huge rollout for Robinhood, and I don't know what that entails. Maybe there's going to be some. We could speculate that maybe they say something about this Lighter integration or partnership, whatever you want to call it. Maybe they say more there. But they said that basically they're going to announce some some stuff crypto related. I believe they said, what was it? They said it'll be like a new era in crypto. Right, like there's they also said that they'll be announcing a suite of products. Right,
well,
yeah.
What we do know is they're working with Arbitrum on like pre-IPO companies. So like a lot of their offerings, they're offering, I think, SpaceX. They offer OpenAI. They offer Anthropic on Robinhood. That's on crypto rails. So and we know Vlad is very innovation forward, which is why I'm so bullish on Robinhood, because I think it is next generation's investing app. So yeah, I mean, I don't put it past him. It's a big bet to make. It's a big bet to make. I need to dive deep into the lore, I think, is what I need to do.
Yeah, I think here's the thing. They're announcing a suite of products, right? A bunch of stuff is going to go live at the same time. So yeah, you're right. Maybe that's one of them. But I think maybe like pre-IPO with Arbitrum, maybe that's one of them. But I think it's going to be like, I wouldn't be surprised. Like, I've talked about in my journal, the L2, the Arbitrum, not the Arbitrum, the whatchamacallit, the L2, the Robinhood L2. So I've talked a lot about that as well. And I really think that they might end up announcing their own chain next week, in my opinion. I think they're going to announce light on the partnership that they have with Lighter, but I don't think when you partner with a product like this with the team with that kind of background, and then you're now going to have like a day to revolutionize the way people look at crypto. Like I think we should at least pay attention.
Yeah, let's pay attention. I think what I will say, Rambo, is now you can see in my post, I think Hyperliquid is overheated. It's been consensus. Revenues are decreasing despite 40% of volume coming from equities. That hasn't significantly made an impact, right? So I actually see Hyperliquid going sub 50, and this has been a good short for me so far. I think Lighter will kind of follow suit. I think the trade here is not necessarily one or the other, but more of a barbell. Hyperliquid being the leader will probably always have a more stretched price to earnings ratio than Lighter, unless there is like some Robinhood announcement and people are projecting crazy revenues coming in. So I think the best trade is probably a barbell of both Hyperliquid and Lighter. And I think generally that shouldn't be too crazy for people to comprehend. If you're buying one, you can buy the other under the thesis that this is the direction we're headed into. 24/7 markets, 24/7 liquidity, private companies coming on chain. You can resonate with both Hyperliquid and Lighter in that sense. So I think what happens here is you trade Lighter a bit as a beta to Hyperliquid and you barbell it. I'd wonder what if you put the chart side by side, Hyperliquid and Lighter, or you actually do a Hyperliquid Lighter chart, who's been outperforming who. So I'd barbell it. That'd be my trade here. I do think it looks good though. It is a more compressed price to earnings ratio than Hyperliquid. The question is, can it capture as much growth as Hyperliquid? So Robinhood, maybe I'd have to dig into the lore on that, but I trade this as a barbell. I think it's actually very compelling. I think when Hyperliquid does go get below 50, and I'm looking to go long, I'd probably see where we're at with Lighter and maybe split my order between the two of them. Probably heavier in Hyperliquid though, of course, because of that being a larger market cap. But how's that plan sound, Chill?
Actually, not too bad. Not too bad.
Good. Oh, good. Not too bad.
Not too bad. We'll take it. We'll take it. Yeah, I think you're right though. Like generally speaking, barbell type of situation. I mean, Aster, if we want to put them in the discussion, I know they have the private pools. I think that's their kind of moat, their differentiator. But I think Lighter is different than Hyperliquid. You see, like Aster and Hyperliquid are kind of directly competing against each other, whereas like Lighter they're doing something a little bit different. So yeah, I like the hype Lighter barbell. I think that works.
If hype goes to $50, what will Lighter go to? Let me pull up a hype chart real quick. Again, so you guys saw the thesis I just gave on Hyperliquid feeling a bit overshot here and probably deserving of a cool off. I think I'm not sure why I don't see anything.
Not gonna lie, Hyperliquid looking like it's ready to reverse.
It could. This would be an area. I mean, yeah, we saw a strong bounce there. Probably an area I close shorts out. Not buy, but close shorts. Maybe not a bad idea.
Yeah. So you have on the well, I also have my my hype chart up. Okay, there you got it. All right, cool. Yeah, there was a nice little so we bounced right off the old all-time high, number one. Number two, around that all-time high bounce, there's a 4-hour SFP. And we front ran a lot of the area of support. Like we barely tagged it, but there's a ton of support levels that we had marked out. And then on top of that, the pullback that we just experienced was smack dab right on the right in the golden pocket area. It wasn't exact, but or just around the golden pocket area. So like I look for a few things when I'm like looking at from a TA standpoint. You know, there has to be a confluence of things, not just one thing that says, okay, it taps this support, it's automatically going to go up. I need a few things. I need it for it to be on a nice pullback. So if it's in one of our key zones on a fib retracement, if it's in a key order block, or if it has like some sort of SFP and it's doing that in an area of like support or resistance, that like those are like confluent signs that all right, cool, like this is about to make a move. And right now that's what's happening on Hyperliquid. We pull back to a key level, the golden pocket. We've had a nice strong bounce, slightly front running a good area of support off of the all-time high area. And then on top of that, you also have that SFP, which meant, you know, liquidity was taken. Now we can, you know, continue to move. So I think from here we go to 75 plus.
Okay. So Chill is predicting a bounce. I don't think it's a crazy call. Yeah. And if this bounces, Lighter probably bounces as well. So I don't know. I would really like, and maybe this is just wishful thinking, I would really like Hyperliquid to sweep this low. And I don't know if we get it. I don't know. I mean, we definitely probably don't get down here
either. I don't think we get it either. Actually, hold on. I'm actually about to long hype. What the heck are we talking about?
Yeah, this is a really strong bounce here. Of course, with Bitcoin still being pretty weak.
Let's see.
Let me look at lit. So, okay, if hype, though the question was, Crypto Jones, if hype goes to 50, so let's say if hype trends down here and hype goes to like this 50 range, which is kind of where we want to go. I actually think it might be slightly above 50, but nonetheless, this 50 range, where will Lighter go? So let's see. Let's do a lit chart. Coinbase. Don't like that chart. All right, we'll do Bitstamp. Okay. Sheesh. This chart is really good, honestly. This has been a really nice chart. I don't know. It's tough to say. I think just probably right around the 135 mark, 130 mark. I don't know. I don't actually have a good answer on that though, so I'm gonna just not give you one. Crypto Jones says, "Lol, comparing hype to lighter is a joke. Kind of like comparing Solana to Sui. One people use and the other is pure speculation." Well, again, you go to the Blockworks and you look at the revenue.
I don't know if it's pure speculation. I think it has some good fundamentals to stand on. All right, cool. I was just putting in my my limit order. I'll long hype at $62.
There you go.
Woo, XPL long is printing, sir.
You want to pop these up?
Oh, yeah. So let's see. What was I doing just now? All right. Let's look at hype first. So, all right, ignore my chart. Like, I know my chart is like super messy on Hyperliquid, but here's the general gist of what we were talking about. What we were talking about a moment ago, and maybe this is like a good clip for the boys. Real quick, hold on. Let me just hit that real quick. All right, cool. So this is basically what I'm looking at, right? Like, you look at the like, let's just look at the 3-day, for example. We went into price discovery and now we're hovering around all-time high. And as we zoom in, you realize that this all-time high area, we literally just tagged it. We're bouncing off of a key price point. When we go to the daily, we get even more kind of like granular, I guess you can say. But all this green here, just ignore it, but it's a bunch of support levels. I actually wanted us to tag like 55.50. That's what we talked about the other day. But when you go down to the 4-hour, you start to zoom in to see, all right, like, is this bounce worth anything? Basically, we swept some liquidity and now we're off to the races, in my opinion, because the low here was this purple line at $52, and the high is at 75. And we've been kind of bouncing in this range a little bit here. I told you guys that I was short a bunch of stuff up here back, it was like a week or like 2 weeks ago when Near and Zek, we smashed some of those shorts. But now I'm telling you, I think I think the time to be short is over. I think we're at the very least going to be targeting range highs. And at most, we're probably going into price discovery. That's what I'm thinking here is the view on Hyperliquid. Same thing basically with XPL. And Dom, if you can just make note of this for clipping purposes. But like I said, when I trade, I look for multiple points of confluence in a key zone to identify whether a chart is about to make a move or not. And XPL is literally perfect example of this. When you start high time frame and you go to low time frame, you start to like get a more macro picture of a chart. So when you look at this daily range between let's call it 7.5 cents and 14 cents, this is like kind of the range that it's been in for a long time. So as we go back closer to 7 cents, we're closer to the low of the range, meaning we're in a discount, we're a key area to get long, right? So that's on the daily. And as you can see, we also have this bullish breaker here for an order block. So that's an area where I'm like, okay, let's zoom in and let's see if we can identify a setup. Now, here's the setup. We had a 4-hour SFP on XPL here, and then we had another sweep of liquidity down here as well. And I'll just put that on the chart here real quick. So we actually had another SFP form right there. And so you have multiple SFPs in a bullish kind of in an area of demand. And so when you kind of start high time frame, you identify, okay, where should a setup form? You start to zoom in and zoom in and zoom in. And here is the exact moment where XPL started to reverse. And I've been long XPL. What's my entry on this? My entry is 0.046. So 0.0846, I'm sorry, 0.0846. So somewhere around this area. After that SFP confirmed, we talked about it on stream. It's in a nice area of demand. You see your multiple areas of confluence, SFP, bullish order block, bullish breaker. And we're at the low of a multi-month range, and we're at the low of a local range here, as you see outlined with the purple line. So again, multiple areas of confluence. Now we're off to the races, and I'm targeting same thing on Hyperliquid. At the very least, range highs, and at most we go into local fresh highs. So that's the setup there with XPL and Hyperliquid. I think those are really the only two that I'm looking at. I know some of the boys in the Discord, they were also long some other stuff like Grass, as well as Lit. Lit looks good for sure. We just talked about that setup. Grass, I'm actually not really so sure. I want to get long on this one, because again, this is the range, as you can see outlined in the purple lines. We're at the top of the range, and I'm not a fan of like longing the top of a range, right? I want to be more closer to the bottom. And then two, we had this like nasty SFP. Let's start when you start high time frame. You really see what I'm talking about here. Look at Grass. We're in the middle of a range. If you were to draw some fibs out, you see we're in the middle of a range. I mean, we're technically in the distance. Yeah, I would much rather, if I want to set up on Grass, I would much rather see the price prove to me it's bullish. Bang, prove to me it's bullish, and then and down here on a retracement or a retest of this level, because right now this level, this red that you see, is acting as resistance. When we break it, it's just a
Tell me
SR flip.
Look like Hype before it kind of just went vertical.
This?
Mm-hmm.
Let me check. So let's take a note real quick. Let's just take a mental note of where we are. Let's look on the 3-day. So it's basically been, macro picture is it's kind of been in between these, it's basically been in between this price level. And it hasn't broken out yet.
I wanna love Grass so much because it's like self-reported. They're probably doing $100 million a year in revenue. Unclear how the token incurs value, or if the token incurs all value. It's held by like the token foundation, so technically it's supposed to get all the value, but the revenues are not happening on chain, so like we don't really know what's happening on the back end. The team's communication is terrible. That's the only thing, man. I just don't know.
I don't think this looks like Hype at all. Hype was going through the key that and we talked about this. You guys were, anyone who's watching us in January, we caught this breakout, and I'm like, all right, time to put Hype on the watch list. This is a multi-month downtrend, and Hype has broken out. It showed signs, right? But I'm looking at Grass, and I'm seeing that it's still stuck in a multi-month range, and it looks like it wants to break out, but
you don't think, you're telling me that chart right there, you don't think it looks like this point in Hyperliquid right here?
Nah, not to me.
Tripping, bro. Tripping, bro. It's just consolidating. It looks like it's ready to go, in my opinion.
Really? I think what I'd want on Hype, because what put Hype is the breakout. The breakout put it on the radar, and I'm like, all right, cool. Relative strength versus everything else, et cetera, et cetera. But this hasn't broken out yet. And instead of breaking out, I'm seeing that it's rallied up. SFP bearish, been bearish ever since that SFP right here. Bearish ever since this daily SFP. It's a high time frame. 1 day SFP. It's a high time frame SFP. Bearish as heck, and that's going into an area of resistance. So maybe it does want to break out. Like, I see the social signals are going crazy. People are bullish, people are wanting to ape people, but the chart just isn't lining up with that just yet.
Man, it's so tough. It's so tough. I feel like I want to get some here because I feel like the trend's gonna leave me, and I hold some Grass already, but I want to get some more here. I think, man, dude, if they're truly doing what's being told and the projections are accurate, and they're doing $100 million of revenue, trending massively up as a data company, this is trading at $100 million market cap. Again, this is speculation. I think this kind of Rambo is similar to your thing on Lit. You know, if Robinhood integrates and Lit could really blow up. I think this is if they're doing $100 million and their holder call on July 7th goes really well, this really could reprice and rocket fast. This is the key with Grass. I think we can sit here and do all the TA we want. Maybe he wants to go lower. Maybe he wants to go higher. July 7th, they have a holder call. On that holder call, they are either say, hey, we did not beat projections, or hey, we're at projections, or hey, we're at above projections. We did 70 million this year. We did 100 million this year. If that happens, this rockets. If they're doing 20, 30 million a year and they're not at the projections, you know, this probably nukes. If there's no clarity on how a token accrues value, this potentially nukes. But I think if they come out on the token holder call July 7th and say, yeah, projections were accurate, we're doing $70 million annualized, by the way, growing, you know, 50% quarter on quarter, it's like almost too hard to ignore. So like we could sit here and do TA, I get it. But ultimately, TA is going to go out the window as soon as they get on that call and they say something that moves his price, right?
Yeah.
So like,
yeah. I mean, you are right. Like I mean, at the end of the day, we are showing signs of wanting to break out because look, we've seen higher lows since February, pretty much. We've seen basically a higher low ever since February. So I can see there being like, you know, some people are, oh, my chart is up. Oh yeah. So obviously we have this low, we have this higher low, marginally higher low, right? So maybe what we need is for a higher low to form here before the rocket off, right? Because, and maybe that's where I get bullish. But right now, the high time frame dictates the direction. We've been making higher lows, but it just doesn't seem like from a TA standpoint it's ready. You're saying July 7th, you know, maybe it takes a little bit because it's not a sell the news event that is confirmed. They need to confirm it on the call. So it's going to be a news catalyst.
Right.
So,
it could go terribly wrong or terribly good.
So yeah, I'm sticking to my guns here. You know what? I'm gonna move my alert. To 38 cents. If it breaks below 38 cents, grab some liquidity, shows some sign. I'm bullish. I'm good. I'll hop on the train. But for now, I ain't touching grass. I ain't touching no grass. And this is from a long perspective. This is from a perps perspective, by the way, not spot, not talking spot.
For the record, guys, I'm almost exclusively always talking spot. I like spot trading. I trade perps here and there. Like I said, I took that short on Hyperliquid and it's printed and I'm probably close it pretty soon, but I'm definitely a spot guy. Abe, let's get into this in a second. I want to talk a little bit more about grass because this guy makes an interesting point. I want to hear what you think about it. So here's what Sam has to say, and I think he's like entirely right on this, by the way. Here's his read on grass. Grass is terrible for crypto. Here's why. The business is farming user data and selling to AI labs for nearly $100 million ARR. In return, they give you a meme coin with zero value accrual. We have no idea where the revenue goes, assuming it lines their pockets until someone shares expense data. Team says Grass is ownerless foundation, yet they make centralized decisions all the time. Andre says there is no equity, even though they've raised venture funding. Who gets paid if Grass gets acquired? This facade lasts until they raise more against equity. They rug the token, or token holders get smart and dump this meme coin. Don't stick around to see which comes first. He made another post. I guess he's quote tweeting this post, so I should probably read into that as well. A simple framework for finding the equity in an ownerless foundation. If Grass got acquired tomorrow, who is the decision maker? Who gets paid out? There's your answer to where the equity lies. There's no shot Grass could raise substantial venture without equity, or at the very least, essence of value accrual. So basically, he's saying, and they are all valid points. And then Lezabre is kind of on the opposite side of this, who's been like a bull supporter, and I'm like right in the middle. I have no idea. It's like I'm torn. Revenue so good, but again, who owns it? Do we have the classic shitcoin situation where they get acquired and we get left in the dust? Lezabre, let's take the other side. He goes, I'm long Grass. Due to terrible comms, Most people have no idea that this is one of the highest revenue generating projects we have in crypto. 50 million run rate as of Q4, expected closer to 100 million now. It's like, true. Is this a blessing or a curse? Is it a blessing that they're terrible at communication and it's unclear how the token incurs value and all that stuff? Is it a blessing because it gives us a great entry for those that are paying attention? Or is it a curse because we have no idea and this is just a shitcoin? So I'm kind of torn. Lesbray says, again, due to terrible
Buying
comms,
opportunity.
you think it's a buying opportunity because people don't actually care about fundamentals in crypto?
No, I'm sure they're going to clear that up in there because you said they have a call, right? On June 7th, on July 7th. So I'm assuming that there is this. So what you're seeing now is a massive debate. I'm sure if you looked at the engagement on these two posts, I'm sure they have pretty good engagement. And so you have this massive debate going on in the Grass community of whether or not the token represents anything. And they have a holders call coming up on July 7th and they won't address it. Come on. It's likely that they'll address it. The fact that they have a holders call, not an earnings call, not a team call, a holders call. I'm assuming that they care about their holders.
Well, it might be a quarter. It might be a Q2 call. It might be an earnings call, to be honest, because this comes right after quarter 2.
Well, I mean, maybe they talk about their Q2 numbers, but the fact that they're calling it a holders call, I think they do care about their holders, but I think they're a big company. I don't think they have the time to cater to, you know, the degen's emotions, the emotional state of whether price is up or down. But I think they see the rhetoric on CT. They see the back and forth, the debate. But the fact is, right there, Lesbray says it. There is no equity, none.
Dude, can we pull both of these guys up for a debate, bro?
Oh, dude.
June 6th.
Dude, do it. Do it.
Oh, I want to reach out to these guys. July 6th, the day before the holder call, and get a debate going. I'm going to reach out to
dude,
these guys.
That would be so amazing. Let's do that.
I am torn. Like, I really am torn. Like,
I'm not. Agree. Yeah, I'm a buyer.
You're a buyer.
Here. Yeah.
Okay. I thought you went in lower a second ago.
I want lower for sure, but I'm still bullish on I'm still bullish on Grass. I don't think it's you know, I understand the questions around value accrual, but I think they'll address it. I think it's a great fundamental setup, and I think this is just really buying the blood, buying the uncertainty. From a technical TA standpoint, you know, with my perps trading, you have to be more surgical with your entries. If I was trading spot, I'd be buying this whole range. I would just be DCAing, but I'm trading this on perps. So I need a little bit more of a technical entry, which is why I want literally 5 cents lower than the current price. But if I was trading spot, like I don't care about no 5 cents, bro. I'll just blast it right there. Like I'll just pull up and blast it. I don't even care.
Yeah, bro. Cause it seems like the numbers are real. Like people are saying they're real. People are verifying this stuff. This would be a great debate. I'm really going to try to make this happen. Hopefully these guys come on. Of course, they're both anonymous, I think. So this is what I'm confused about. There is no equity side for Grass, only token value. This is what I'm confused about. On the token, there is no equity, none. The revenue entity is owned by an ownerless foundation, so value can't get trapped in some VC cap table. Like, this sounds good, but you know, like Sam made the point of, someone's got to make these decisions. So it's not ownerless. Someone's making decisions. And if they did sell, you know, if they did do a fundraising round, surely they weren't selling surely they were selling equity. I don't know. It's a really cool. Okay. I don't know. I think you should watch Grasso. I think you should be on the holders call at the very least. Because if they come out and say, if they
should we do the holders call, bro? Should we try to stream and like recap the holders call or something? Like, should we do something around that?
When I get home.
All right, guys. So we might try to figure this out. So we might try to do like a debate the day before between these two traders. We'll bring them on. We'll see. We'll kind of have them. It don't got to be nothing long. Maybe we just bring them on for like, 30 minutes. And we just have them kind of go back and forth, and we ask our questions. You guys ask questions, and we can kind of see which side holds up. So we can do that. And then the next day, when like we're about to get the potential answer, we can, either stream the holders call live, or we can do like a recap of it once it's done. Or we can just like cover all the news around it. I think that'll be really cool.
All right, I'm just making sure that timestamp's noted, because I'm going to get that clipped up, do a public call to action for these two. I'm going to also reach out to him. That'd be awesome. Hope we can get that done. Let's, Ave says, what are some good things pulling back today? Chill, do you have anything you're watching? I have a few on my list.
Yeah, I got some stuff. Let's take a quick look. All right. I'm out of that mindset, out of my perps mindset and into my on-chain mindset. All right, cool. So Opal, number one. You guys know, like I have these at the top of my thing. If it would be anything, it would be
Chill.
that. Yeah.
I hate to cut you off, but I do have some more major stuff. If we want to talk about my major pullbacks I'm looking at, and then we can go to on-chain to keep the order, or we can, I don't care. But it might just make more sense to go higher top down.
Yeah. If you want to go top down, let's do it.
Okay, I'll keep it quick then, Ave. But just to like answer this question in a way that makes more sense. What are some good coins pulling back today? Good buy zones. Real quick, I'm not gonna like elaborate on theses here. I think I've done that quite a bit. Hyperliquid getting to that buy zone we talked about. WorldCoin, Josh is really bullish on WorldCoin. Again, this one just has too much uncertainty for me, but I think with the narrative and trend, this could potentially be a buy. It's been one that's leading, and we've seen that the leaders continue to bounce the hardest when the market turns around. So WorldCoin, not bullish for me, but this is in a range that becomes interesting. So I would look, sub 50 cents here. WorldCoin looks pretty good. Backpack, for obvious reasons. I have explained the thesis here. This is at 130 million. It's coming lower. It looks like it's off a hot run. I think what happens here is it takes some time to cool off. If I get this alert here, you can see at 47 cents, I'm going to start probably putting in position number one. If we get down here, which I doubt we get. I mean, we're sub 100 million at this point. I am hammering the table on this. So there's Backpack. Jupiter is an interesting one. It is strong. It's not on pullback though. Jupiter's doing good revenue. Of course, one that'll pick up with volumes coming back to Solana. Also, I think potentially see some of the flows from some of the equities that are coming in. My price to earnings ratio is written down on my whiteboard over there, which I can't see. So I would say Jupiter's not in the buy zone, but I am watching Jupiter if it gets down here. But that's kind of like a non-answer since whatever. JTO, not quite in the buy zone. I really need JTO lower than I think a lot of people want it because they have no revenues for their perf platform, though I do think they're actually going to capture a lot of meaningful revenue. So maybe not a buy zone right now for JTO, but if you get down here, right? So I do have an alert here at 0.57. If you get below 0.57, I think that is like a fair DCA1 under the guise that we could trickle down lower into this range, considering that this could be a sell the news event when they launch their perps platform if it doesn't do enough revenue, or if whatever the case may be. So JTO is when I watch sub 5.7 first DCAs and really fully in by if we get into this lower bound here. Grass, we just talked about it. Yeah, I think like even accumulating some as we range in this area is like not a bad idea. If we get down sub 3.6, 3.7, I'm probably slamming pretty hard into grass. That's it. That's it for me on chain. I guess maybe lighter if Hyperliquid gets down sub 50 as well, potentially. Rambo, I'll have to look into that more. So there's my higher time frame. Just want to cover that before we go down the risk curve here. But chill, you want to talk about on chain stuff? You're good to go.
Yeah. Good breakdown on the majors. Couple things that I'm watching. Obviously, you have Squire. I mean, the entire thesis around inference capital markets is a huge one. They're building like core tech that everyone wants to integrate to buy and sell their inference. So obviously, Squire remains like probably my highest priority right now, I think, on chain. Second, very close second is Clued. Not to say that it's memory. It's a completely different category than inference. Memory affects affects accuracy. It affects cost. So Clued is obviously building something really good. Still having tagged the buy zone. Sub at around 1.5. I'm really gonna stick to my guns here and hope I get that. that entry around 1.5 or to top my bags off. Opal also like looking like it's consolidating around here. We also have this actually I didn't notice this before, but we have this kind of downtrend that's been playing out on Opal. So, waiting for it to break that downtrend, but honestly, like it's still to me in a really great spot. So that's the kind of like down channel here. Waiting on Opal. I'm actually going to take Pi off of my watch list. Like I did not really like their interview. I'm gonna be completely honest. I did not like their interview that we did with them. And I hate to say that, boys, but the Pi, the product is really nice, but Pi, the token, they haven't really figured out what they want to do with that. So I'm gonna actually just kind of hold off on Pi. What else do we have? Let's go to the other Sol list. Man, ISO. ISO
Swiping
looks
cards
good.
and stacking chips. No, you're sinking ships. Have you heard that song?
No, I've never heard of that before.
Bro, you haven't heard the song Rubbers? Bro, who
No.
here's heard Rubbers? Bro, you know Shoreline Mafia, right?
Nah,
You don't know Shoreline Mafia?
nah, bro.
Okay, well, they
Nah,
sing, like,
brother.
the LA West Coast songs, very like hood rapper Xanax coded songs. And one of
Yeah.
the artists recently dropped a song called Rubbers, and it's like way different than his style whatsoever. This guy's got like face tats. He's singing like 80s like pop rap. It's hilarious.
No
Oh,
way.
it's a bang. We'll play it after we're done.
Okay, all right. We'll play it. We'll play it. GameFi tokens. Clash is I have my eyes on Clash here. I'm gonna keep watching. I'm gonna keep watching. Basically,
GameFi perps.
Yeah, gamified perps. I'm gonna share with you guys some quick numbers on Clash. That we actually are talking about it in our Discord here. And let's see. Here are the numbers: 5K users, 30 million in monthly volume. Releasing features in the coming weeks that will increase volume by 3 to 5x. Only front end aggregating 15 perp dexes. 1.1 million in a day from just one of the perp dexes that they integrated. So obviously, you see the pullback and everything. It's fine. Or not, it's fine. Like obviously, like I'm just now researching this like while we're on stream. I'm out here trenching while we're on stream with the boys in the Discord. But really good pullback level for me. Obviously 0.886, really nice level. Right now, it's sub 500K. It's super, super low, bro. Super, super low. Oh, banger tune, you know it? Okay, I can't wait to hear it then.
It's popular right now.
Frag is another one. Frag has actually been like bouncing heavily every time it dips. It's been bouncing. Chart looks absolutely fantastic.
It's the only FPS GameFi game that I've actually seen that's been holding up decently at all in crypto right now.
Really?
Yeah. Have you seen another first-person shooter crypto game since this like GameFi meta popped off?
Actually, not since this one popped off. I actually played an FPS that was that I forgot the name of it. What was it called? Oh man, but it's actually on PS5. And this was like, yeah, Off the Grid. Yeah. I was like, okay, like not my style. I'm good, but not bad. At least it's playable, right? Like at least it's playable. It's not bad at all. So there's that. Falling Wedge as well. I probably wouldn't even mind a little pullback here. Since we're at the top of the wedge, but not bad. Actually, a mil, not a bad bid in my opinion. And then the last area, the last two that I want to cover. PokerX has a dip, but not a big one. But it did dip, and honestly, like people have not been wanting to let this go at all. And as you can see, we're kind of breaking out of this like little range that we
locked
formed
in for Wednesday, by the way, Chill.
So I'm asking them for Tuesday.
Tuesday, okay.
Because Wednesday we already have two already. We have
PRX VT and
Repo. So I'm gonna just
try to get
run
Farmtown, bro.
Farmtown.
Mm-hmm.
Oh, is that Farm ticker Farm?
Yeah, it's like one of the leading GameFi. I think right.
Got you. Okay, cool. I didn't cover that one actually. I probably should have. But yeah, I got them scheduled for Tuesday, so we'll see. So there's that. And then last thing I want to cover with you guys is just EZA. Just look out for the EZA Eco. Yeah, I think we got VSK and CPX are kind of the top two. I'm favoring CPX simply because it has I think the dev has like 42% of supply or something like that. So there's a lot of supply like off the market. There's also this sort of flywheel as well with the token. And I'll share this image with you guys. This is directly from our Discord. But you buy CPX credits your route ledger, direct, rent, or smart route. You spend compute, 40% overhead burns, destroy per job, supply shrinks, which means scarcer. So obviously there's like this token flywheel. I haven't done like the most research on this. Just like, again, we've been trenching while we're on stream here. So I just kind of discovered this, but I love supply shocks. I love deflationary tokens. I love those setups. And so I'm going to prioritize that one. I do that very often. I prioritize deflationary setups on chain because you know how things get in crypto. Like things get ridiculous. Things get crazy. Price action goes crazy. But VSK is there was a write-up I had on this one, I believe, on VSK, if I'm not mistaken. Yes, here it is. So one of the boys, F Crypto, he's been a longtime follower of mine. I've followed him for a while. He tends to do these write-ups and stuff. He's a really good researcher, really good trencher, but he calls this the on-chain Citrini, the next 100x opportunity. So basically it's like it monitors like global geopolitical events. And so as you can see here, they have geopolitical intelligence that translates global events into business relevant signals, supply chain disruptions, energy repricing, semiconductor choke points, Red Sea reroutes, et cetera, et cetera. So it kind of aggregates all of the world's events into one place and uses it to where and brings it to a business to where they can actually use it in their spend. They can incorporate it in their planning and strategy on product and different stuff. So sub 500K, that one. So yeah, a lot of people really like this one. But yeah, I those are the two so far that I feel have the most
also
potential.
two.
They have by the way, they have a Harvard devs on VSK. But yeah, go ahead.
Yeah. Also to preface this as well, guys, like Monday we have 10 of the top ecosystem projects on EZA coming on the show. We want to figure out what this hype on EZA is about. It's done really good volume. Of course, we literally were the earliest stream to break ICM as a meta. We covered all of Believe. We covered every launch pad that came from that. SOAR, Street, you can even say MetaDAO, right? So many came from this ICM meta. EZA is like the newest version of ICM. Again, suffers from some of the pitfalls that we've seen in the past, like no clear token value accrual. But they have a lot of interesting projects building with a lot of interesting potential. So Monday next week, we will literally sit down for like 3 hours and we have 10 projects coming on back to back to back to back to back. We're just speed running through them, like 20-minute rounds, going over the basics, team, background, problem solution, project, total addressable market, GDM strategy, roadmap, grand vision. And we're just doing that all the way through for 10 teams. So we're going to get this entire ecosystem covered in one day. We're going to get all that stuff out there. You got to tune in. You definitely are going to want to tune in live to that because I'm sure, like we saw in the past when we featured EZA, these are lower market cap projects. So that's your disclaimer here. I'm sure a few of them that answer right are going to probably reprice tremendously. So I don't want that. Like, I don't want to move prices at all. It's like not my goal, but I'm sure it's going to happen. So there's your little, here it's happening right there. So MCGX EZA Investor Spotlight Day, we will have the top 10 projects or 10 of their top projects come on and going to give us the full scoop. So tune in. Speed rounds, we're firing through. But that's like the context on some of this too.
Cool. And I think that's it. I think that's all for today. Look, we're at 3.5 hours streaming. I think this is a nice place for us to wrap. We did our macro segment. We did our on-chain stuff. We gave you guys some pullbacks, some trade ideas. We even talked to Leighton from Zero. We talked to the guys from Knock as well. It's been a great day. So I want you to do two things. Again, some housekeeping. We do this at the end of the stream. There's 2,200 of us, more than 2,200 of us here right now. So here's what you're going to do. Number one, you want to make sure you're following MCG. Go to @MCG Live. We do this Monday through Friday, 12 p.m. Eastern time, where we get the best of the best projects, the most cracked builders, the best founders, and we interview them. We talk to them about their product, what they're building, why they're building it, and why it's important. So if you love that, you want to come back to us at 12 p.m. EST every day. So yeah, make sure you're following the account. Thank you so much for 11.5K. Oh my gosh.
Sheesh.
Numbers just keep crushing.
Wait. Oh no, we got to do it. We got to do it.
Do we have to do it?
Okay, well, we don't have to do the live mogging on Thread Guy right now, but pull up Counterparty.
Oh my God. I still have it from when we did it the other. Oh shoot. The flipping.
Will MCG flip Counterparty before Solana flips ETH, okay?
Yo, that's crazy. All right, so we're at 11.5K, guys. And so we're at 11,521. Counterparty is at 11,566. So here's what you need to do. Go get like 2 people. If each of us right now, we go get 2 people to follow the account, we can just go ahead and flippening, done, call it a day. Okay. But
or just
again,
mass unfollow MCG now. Mass unfollow. Get us to 11.4. Make sure.
You mean 11.6. You mean 11.6.
No, mass unfollow MCG.
Mass unfollow.
Yeah.
Oh my God.
Just
don't
make sure we
don't
don't
do
even have
that.
a shot. Everyone unfollow right now. Smash the unfollow button. No, I'm kidding.
So yeah, MCG has been growing at an absolutely crazy pace. Shoot, even the MCG Alpha account has been catching some follows. Feel free to give us a follow there. Man, I mean, look at us crushing the numbers. I wonder.
You guys should see the metrics, bro, on the back end. It's going dumb, bro.
It's going absolutely dummy, bro. It's going dummy, bro.
All made possible because of our partners, Meteora, man. Shout out to the squad. If you're not DLMing, providing liquidity, you should be. Go join the LP Army and do that. Boom.
And so the second thing you'll do after you come to the MCG page, as you know, you'll like and retweet. The stream is coming to an end, but if anyone is going to be joining the stream, they can always rewatch some of the great interviews that we just did with Zero Compute and also with Knock. So great interviews, great guys, also a ton of alpha for people. So yeah, like, retweet, follow the account. Also go to the link in the bio right here. Go to the link in the bio. Our Discord is live. We trench in the Discord all the time. It's amazing information that's being passed around. Very nice research. Good early alpha, and we're slowly growing the server. We have, how much people do we have in here now? Holy crap.
200, 300.
I think we're about to be at 300. Hold on, let me see.
Yeah,
281.
281.
So we're getting to a point where we might have to
this is it. It's all in the testing phases here.
Yeah.
All testing.
It's all testing so far. We might end up, doing like a cutoff at some point. We'll see. But it's going really good so far. But yeah, no, guys, look, appreciate all the love, appreciate all the support. You guys have been absolutely amazing. And we cannot, be more grateful for the support that you guys have shown us. We're trying to expand, man. We're in hyper growth phase. You also saw the MCG Signal product that we just launched yesterday. It's
Feedback.
Give us feedback, man. Go to the website. In fact, if you guys want, maybe I just show them right now. Yeah,
show them right now. Look, I mean, let me get this banner down. Look, at the end of the day, we don't really know the direction we're taking this product. What we do know is we have a ton of data. We have a ton of founders coming on here making claims, and we want to just distill that information to you guys as best possible. Maybe we turn into a data platform. Maybe who knows where this goes? But give us feedback. What you guys want to see? There's a lot of stuff we need to fix. The chat box could use some work, but I think UI general feel looks pretty good. Pull up the Collector Crypt one so they can get a better idea. But
yeah, so peace. We'll see y'all in the Discord. Top Fumbler, Jeet Sparrow, RJ. We'll see y'all in the Discord. Appreciate y'all, boys.
But definitely open up that Collector Crypt.
This is MCG might be my daily listen. Wait. Hold up.
Come back.
I'm about to take a screenshot of that. Appreciate that, man. Just validation for the stream. We really, really appreciate you. All right, so here's the MCG Signal website. So basically anything said on stream is going to be recorded on this website. As you can see at the bottom right, you have Ask the Desk. It'll be an AI that you can prompt and ask questions about any project. So that'll be that feature there. And then when we scroll down, we go to Collector Crypt. You open up a project page, and it has all the information. It has the price since the first call, as you can see top right. Since they've been on, they're about 600% up almost. It gives you all of the information, right? Market cap, fully diluted, volume. But as you scroll down, you see all of the other things that they released on stream. So there's things like top holders. There's things like token holders. There's things like supply structure, protocol fundamentals. You keep going down, and there's other stuff like there's the intelligence scoreboard. There's all sorts of other things.
This is, I think, my favorite part here.
Yeah, this is like the meat and potatoes.
This is the meat and potatoes. This is like our framework. So we always ask the questions, like the core 10 questions or whatever, right? Team, background, project, problem, solution, go-to-market, total addressable market, roadmap, vision. All their answers for these are here. And then if you scroll down, all the answers for random statements they made are also here. Yeah.
And then it also has like a link to, our YouTube videos as well. So that way you can see the full segment.
The full video. Yeah. So we got to work on it. Look, we understand it's not a full-fledged product. It's early stages, scrappy, but give us feedback. We're going to try to get this ironed out, and maybe we probably have a completely different product 6 months down the road, but we want to do something working with the boys. Fumbler, we appreciate this. Don't listen to it. Don't listen to MCG, according to Top Fumbler. It's like a drug. Next thing you know, it's, you make sure you're listening to everything to save, but why don't I just read this? I can't even talk, dude. All right, whatever. I'm not going to read it. Nonetheless, click that link in the bio on MCG. You can check out the Discord. You can check out the thing. You can check out Chill's feed picks. It's all there, guys. So we will catch you next time, huh? Tomorrow.
GG's.
What's tomorrow?
See you in the Discord. Oh, wait. Tomorrow.
I got you.
What is tomorrow?
We have Railgun coming on tomorrow, I know, which I'm excited for.
Oh, shoot. Yeah.
My privacy, boys.
Massive.
Dude, our schedule is so packed. I just can't even remember. Okay, here it is. Here, I'm sharing my screen if you want to pop that up. Okay, so yeah, we have Extra, which I remember when they were booking, I think their token was doing pretty good, and we have Railgun. So Railgun on 12:30, Extra coming on after that. So that'll be a great conversation. Let me see, XTRA. What's our token looking like? Okay, it's a bit lower. Yeah, it's holding steady though. Okay.
Yeah.
So yeah, we try to make sure we don't bring you guys real low tokens, and it's kind of difficult because we're booking a week out, and sometimes they go from 1 million to 400K, and nothing we can do about that. So yeah, 10 seconds of your day because I can't read. That's what I'm saying, bro. So don't tune in, don't watch. All right, boys.
GG's, boys. See you in the timeline. See you in the Discord. Love you.